Hey everybody, this is Jose here. We are about to start today's session. So as always, it would be great if you could confirm on the comments box that sound is okay. So please type anything nice, hello, good morning, something like that. That would be my clue to know that you heard me and therefore sound is okay. Wonderful, thank you so much. Thank you so much, guys. Yes, I am very much looking forward to it as well, Dirk. Very good, perfect. So it's time to get started. Let me maximize our introduction slide so we can start the day with a proper focus, if you wish, and we'll jump straight into all the questions that you guys have been sending, as well as questions that I'm sure that you guys also have. Okay, so let's begin. Welcome everybody to the AutoUFOs get together sharpening session. Today we are about to sharpen, to a pretty deep level, because normally sharpening is when I expose you to material or how to use the app, certain rules, etc., etc. But today we're gonna sharpen deeper, if you wish. Because basically you guys have been practicing everything that we have been discussing in these sharpening sessions, and you came back to us with questions. Okay, so those questions, most of them are pretty much advanced. Okay, and it's gonna be a very interesting session, the one we have in front of us. Okay, so very excited. So May 18, I didn't say it, my name is Jose Blasco, I'll be your guide. And before we start, as always, we have a disclaimer to cover, so let's do it. The following videos, clips, and demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good, so we are ready to go, guys. Okay, we have a TradeStation ready and loaded. We have a TradingView ready and loaded as well. And we have a little bit of today. I have three, so I'll be explaining that much in depth later, but I have three sets, one for the futures, one for the Forex, and one for the longer term that you guys have been asking. So lots of things to discuss today. And most importantly, I would like to start the day with this Word document, where basically what I have been doing in this Word document is we have been collecting all the questions that you guys have been sending via email, and we have been copying and pasting them here. So I got 6 full pages with questions, some of them including screenshots. And again, we will go over those questions, provide answers, and this should be a very powerful session, because certain scenarios in trading that may happen to some of you when trading may not have happened yet to others. And by going over those sessions, really, we're gonna take everything to the next level for everybody, no matter if those cases happen to you or haven't. Okay, so again, super exciting. So what I'll do is I'll go ahead and cover 1 page of questions, and then I'll stop with the Word document, and then I will turn to the comments box. And if you guys have questions but didn't send them ahead of time, then I will give you the opportunity to phrase your questions, okay? And I will take a few of those, and then I will come back to the Word document and go for page 2, and then go back to the comments box and go for live questions again. I will keep switching between the Word document questions that were sent via email to the live questions that you guys may be typing on the comments box, okay? Is that okay, everybody? Everybody okay with the plan? Everybody ready? I guess so. And hey, Andrea, you made it. Very good. Very good. Fantastic, guys. So let's begin. With the first one. Okay. So this is a question that was sent, and it says here, what should the rules or requirements? What should the rules or requirements for change to our trade management should if the following happens? Okay. So for example, we execute a short based on a 2-minute time frame edge rate UFO with the overall downtrend. Okay. So just to clarify, closes are happening below the average on the common time frame. So on the edge time frame, which in this case is a 2-minute time frame, we have red UFOs. Okay. So what if you execute a short based on those 2-minute edge red UFO with the overall downtrend, and almost immediately that red UFO disappears and a big opposing UFO appears almost right at the entry. In other words, you had a red UFO right here. Let me redraw this. You had a red UFO right here. Price came up, 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 up. You got filled, okay? And the moment you got filled, very quickly, that UFO disappeared, you know? So basically, oh, I went too far. Basically, price went up and that UFO disappeared. But the problem is not only that that UFO disappeared, the problem is that a new green UFO just formed below price. And yeah, you are now expecting, because it's a downtrend, that this will continue going down. But now the concern is that UFO going to stop everything, especially given the fact that my red UFO disappeared and therefore there are no more sell on field orders? That's the question, which is a very, very, very good question, okay? So should we do nothing at all as the overall trend is strong and on our side? And picture for clarity is attached, okay? So again, super, super good question, okay? Lisa, I can see that same happened to you as well. Very good. Okay, and this is the power of these sessions that we're gonna do from time to time, and you guys being diligent, practicing the methodology and sending your questions as well. Okay, that's the power, because basically this is enriching for everybody, including me as your instructor. So next time I explain the methodology, I can also take these scenarios into consideration and do a better job explaining it for you guys. So again, this is very healthy for everybody here, including myself. So so what do we have? Okay, well, first of all, you basically gave the answer to the question yourself, okay? Because in this case, okay, the fact that the downtrend is in place, and on top of that, the downtrend, as you can see with the red color, is strong. Well, remember, we said that multiple times in our sessions, which is, in a downtrend, the buy on field orders tend to be canceled. Okay, that's what normally happens. Therefore, ignoring the green UFO that forms after you got short, it's not a crazy thing to be done, given the fact that those buy on field orders will tend to be canceled. Okay, so now the concern is, okay, so why did the red UFO disappear, right? So, well, again, the app is dynamic and it updates every candle. The app updates, isn't it? And it also updates intraday when it comes to erasing UFOs, isn't it? So if price went through a UFO, or price, remember, in those UFOs you have two parts, isn't it? You have the outer part of the UFO, right? The outside circle, if you wish. Let me try to do a little bit of a better job drawing the circle. So you have the outside circle, and then you have the inner circle, isn't it? Remember, the inner circle represents where the majority of on-field orders are. So if a market was to come up, hit the UFO and drop from the UFO, then you would see that UFO remain in place and become, from dark color, become light, because some of the on-field orders have been consumed, but the majority of on-field orders are still in place, which is the inner circle within the circle. Okay, it's our little flying saucer, right? So now if the price came deep enough to a place where it actually hit the inner circle and then dropped, right? So the problem is that not only you have consumed more orders because you went deeper, the problem is that you actually went all the way to where the majority of orders were and you reacted from them. And obviously this is a big raise of a flag, in the sense that now you could not rely so much on that UFO anymore, because the majority of orders have been consumed. So if you were to be in a situation like described, where you got short, the UFO disappears, and on top of that you got the green, and now you're like, oh my God, what do I do? Because the red UFO I was relying on is gone. And on top of that, I got a rival UFO that just formed. So basically you are now left with only one thing in your favor, which is the power of the trend and the power of the potential for new on-field orders to be added thanks to the average, okay? So the way to treat this trade, okay, the most efficient way to treat this trade would be to do nothing, as you suggested, because you have the trend in your favor, okay? And also you have a target one very close at 1-to-1, and most of the times, okay, it doesn't seem to be this case, but most of the times, normally that UFO, that red UFO, that green UFO would normally don't form so close. It would be normally would be just a little further away. And in many cases, okay, and I'm sure you have seen that, in many cases, your safety target is a little before or somewhere in the middle. In other words, the safety target is easily achievable in most cases. So the right way to treat this trade will be to do nothing and stick with the plan and just rely on the trend, etc., because you have the trend and the moving average in your favor. The trend is powerful, as you know, because they tend to last. And the moving average may add as a new addition of unfilled orders, okay? And in the end, if you're wrong, you get stopped out, but you still have 2 components in your favor. Out of 3, you still got 2. So, if you told me that you have no component in your favor, then yes, get out. But because you still got 2 components in your favor, the easiest approach on how to deal with this trade, and in this case, the way I would suggest to do it would be to do nothing, okay? Is this well understood for everybody, guys? Orlando, that has happened to you. Yes, very good. And I love it because that means that you guys have been practicing. So good job. Bojan, Jose, you do a fantastic job explaining everything better than anyone I have learned from. You are very kind, Bojan. Very kind. Thank you for that. It's, I just love this. That's all. Just like you guys, it's Sunday, Saturday today. And, we can be somewhere else, but we are here, right? So, our passion is there, and that's what it is. Okay. Similar question from the same trader in this case. Okay. So we have again a case where the prior candle was closing below, the trend was strong to the downside. We had the red DMI and the close below the average, right? So we were in a scenario with a strong downtrend. The trade was taken. Okay. And here is the comment as well. It may seem very small to read. I will read it for you guys. It says, red UFO being hit, green UFO too close for 1-to-1. Okay, so sometimes it will happen. Most of the times, okay, you will have your safety target just a little before. Okay, in this case, the reason why it's not the case, which sometimes happens, okay, is that because you have this collection of 2 UFOs overlapping each other, isn't it? The beauty is that you have more probability in your favor because you got 2 forces pushing your direction instead of 1. But the problem is that when you have 2 UFOs overlapping each other, the resulting distance from entry to stop is greater, and therefore those tiny UFOs that form as price is returning into our entry UFO, many times will be a little too close for our taste, isn't it? So when you only have 1 UFO, normally this almost never happens. When you have 2 UFOs or 3 overlapping each other, then it's common that it happens. But again, the right action would be to do nothing, just stick with the plan. Why? Because, think about it. In the prior case, I was saying you have 2 forces in your favor, right? You have the trend and the moving average acting as a source of potential unfilled orders. Those 2 things are in your favor. Okay, ideally you have 3, okay, because it's the UFO, the trend, and the average. Okay, well, if the UFO is gone, you only have 2, right? But I still said stick with the plan. So in this case, if the first UFO fails, okay, or it doesn't fail, but the green is too close, what may happen is that price does bounce from the red, goes to the green, bounces from the green, and goes to the next red. And if that's the case, well, guess what? The unfilled orders that were filled below are now gone. So when this market starts falling, you will normally reach your safety target with certain level of easiness. Okay, so what is the right action to be done? Nothing. Okay, nothing. Having said that, this is a fantastic question. And I'm very glad that you brought it to this session because if you recall last session when we talked about calibration, there is a word that I used many times, a word that starts with C. Anyone remembers the word I'm talking about? A word that starts with C that I used many times last Saturday? Anyone would like to type that on the comments box? Anyone? Okay, starts with C and has to do with something very personal. It does not apply to your computer, your TradeStation. It happens to you. Well, you know what? You are right. Confluence, I did talk about it. Consistency, I talked about it. Calibration, I talked about it. Yeah, but the key word was confidence. Okay, that's the one I was talking about. Confidence, confidence, confidence. Very good. You got me, guys. I got you thinking a little bit, isn't it? But it's, so what's the beauty now? Now that this question has been asked and you got the answer, what happens to your confidence now next time when you see this happen to you while you are taking a trade? What's going to happen? Are you going to be like tempted to cancel the order or do something magic, or are you just gonna remain in your professional position and just stick to the plan and be disciplined, be mechanical? Is that making sense, everyone? Okay, so again, very, very important question. Okay, very good. So that was page 1. Okay, so before we move into page 2, yeah, trust the UFOs, John Clifford, you are right, but also trust yourself. Is that making sense? You gotta be confident, okay? You gotta be confident, and this is done through practice, through back testing, through being parts of the community we are, isn't it? Where we ask questions to each other, we help each other. I mean, some of you are doing an amazing job with some Telegram groups and the Discord as well, that you are connected and you share messages and even trades and questions and even documents, and all of this helps to build up that confidence, okay? But anyway, let's go back to you now, guys, okay? Because I am done with page 1, so this will be the time now for you guys to type live questions. If you have any question, this will be the time now for live question number 1, and from there I will go back into page 2, okay? So John Clifford, does chart trading uses less resources than the matrix? The matrix gave me trouble Friday. Yes. The answer to that is yes, John. The matrix uses a lot of CPU power. And to be honest, I'm a little bit of a lover of the matrix in a sense that it's very visual and it's very convenient to drag and drop, and so I like it very much. But also it depends on the market that you trade, because you have seen me sometimes spend a long time dragging and dropping my target locations and things like that on the matrix, maybe because I was trading markets such as the Nasdaq. Okay, and when I trade markets such as the Nasdaq, because the Nasdaq or the Dow Jones is even worse, they move many points per day, so you end up dragging up and down for a long time. So then the matrix is not convenient anymore. Chart trading there becomes more convenient. Okay, also chart trading uses less computer power. Okay, now I believe, okay, and you guys feel free to give me some feedback as well in case I am wrong. I believe that for educational purposes, if you wish, kind of like for demonstration purposes, maybe the matrix is a little more visual in the sense that you get to see the results on the right while you get to see the chart on the left, because if you use chart trading, it's easier to place orders, but you don't get to see the kind of in such a visual manner, you don't get to see the real-time P&L. So, normally for educational purposes, I like to have the matrix there, okay? But at home, when you are trading for your own, feel free to deactivate the matrix if any. It does use a lot of computer power, and sometimes it will even go ahead and hang your computer, okay? And a very heavy trading day. Good. Fantastic. So, yeah, Mod. Well, the first question of the day was very low time frame, okay? And this is what we do when we do the sessions on Tuesday. We do short-term trading, okay? And by the way, you can see it yourself, if you look at our YouTube channel and you look at the amount of sessions, the amount of views that we have when we do short-term trading versus longer term. It seems that for whatever reason, the majority of you guys, are more inclined to do short-term trading. And like half of you guys are more inclined to do longer term, okay? And therefore, because more of you are using the tools for short-term trading, obviously most of the questions are for short-term trading, okay? But let me tell you that longer term is just as important, or maybe even more, because typically the short-term trading is done with smaller account sizes, where the longer term trading is done with the bigger account sizes, okay? It's more like the investments and it's more the life savings of a person or a family, and those accounts are normally larger, okay? So it's very critical, okay? And I've said it for a few times, and we are getting organized, guys. We will be adding sessions in the future where we'll have more time spent for longer term, more time spent for Forex, We'll touch on the cryptos. You know, there are many things that we need to do that we are not doing yet, and we will do as the community keeps growing. Okay, guys? So please bear with me on that. Okay. And by the way, Mod, you know, the beauty of trading and on-field orders and UFOs and all those things is that it's all it's kind of like fractal, if you wish, right? So the methodologies that we apply, I mean, let me show you. Okay, let me show you. So the methodologies that we apply here when we're using the common time frame and the edge time frames and all of these, okay, that we do on futures on the Tuesdays, okay, for example here, right? So if you were to use the 15-minute time frame to identify the trend, you have been instructed that as an edge time frame, you want to use the 2-minute, and optionally, you can use shares and tick charts. And if you were to do that with the S&P, then you would be using the 2584 shares and the 1597 ticks. And obviously, this is very, very short-term trading, okay? And you would be using the moving average with a common time frame, and you would be using the UFOs with the edge time frames, okay? So you have been instructed to do that, correct? Well, let's say you tell me, which is what you just said on the comments box, let's say you tell me, I like the daily charts, okay? Well, we haven't really covered that properly, but this would be what you would be doing, okay? And we will cover that little by little. As a common time frame, okay, as a common time frame, okay, you will be using the daily, okay? And using the daily as a common time frame, you would then go ahead and use an edge time frame of 55 minutes, okay, or 55 range, which is a time frame available in TradingView. I will need to talk about that, okay? So you have your edge time frame, your reactive time frame, okay? You will be using 55 and 21, okay? And this, the way this will look like, it would be like that. So let's say you want to trade the S&P in a daily time frame, okay? So notice how on the top, I have SPY 1 day. So this is a daily time frame, okay? Or you can even do a weekly time frame, okay? So now I got the S&P weekly time frame, right? Or you can even do monthly time frame if you want to go larger, okay? So monthly time frame, 1 month, okay? And now what are you doing? So you looked at the moving average, okay? You looked at the close before was above, DMI told you strong uptrend. So what did you do? You waited for price to come to the average, you bought expecting the move to go up, right? And you did that by looking at the 377 time frame based on time, based on the document I just showed before, okay? If your common time frame is monthly, you would use at the 377 minute edge time frame or 377 range time frame, okay? So here you got the 377 minute and the well, in this case for the range time frames would apply to Forex only, sorry for that. So 377 time frame based on time, and whenever this market earlier this week, you know, maybe you had a, well, not maybe, you had a UFO right here earlier this week, right? And when the price, you know, of the S&P came into the UFO, where this price was lining up with the average, you took the trade, and now price is traveling towards your target, and when it gets there, you will take your profit. Is that making sense? Which is the bounce that I'm talking about from the average above. Okay, it's the same story, the same thing that we do intraday. You can go ahead and replicate it and run it, okay, for the longer term trades, you know, using the same philosophy, you know, that I just described, you know, a second ago, okay? So very good comment there, Mod. And even though we haven't conducted proper longer term sessions with charts, you know, when we have done longer term sessions, I've been using options and I've been super simplistic about using UFOs. You know, we will get a little more sophisticated, adding the very same methodology we use for intraday for those higher time frames, okay? And now we'll become way more precise with the timing, and also I need to add more options material to just kill it, okay? And we'll get there, okay? We are definitely progressing big time, okay? In just a few months that we are together. Lisa, I am having trouble with chart trading often if you can't move your targets. Okay, you know, this has never happened to me, Lisa. So I would say maybe it's a good idea that you contact TradeStation, I don't know if you have done it yet, and make sure that your install is all good, is all fine, and you can, or maybe even uninstall TradeStation and restart fresh. You know, when let me tell you guys, and this is a little bit for everybody, when TradeStation behaves weird, and this is an example of what I would call weird, because, you know, chart trading is not something new in TradeStation. It's something, you know, that is there for a long time. So if it's not working smooth, my suggestion is that it's either you have a problem with the install of TradeStation, or there is a bug on the update that you're using, and that is fixed by updating the update or reinstalling TradeStation, or you have a corrupted file, which is your workspace or your desktop. Okay, and this is always a little bit of a pain, right? Because if your workspace file gets corrupted, the only way to fix it is to create a new workspace, reproduce all your charts from scratch, and then save and overwrite the prior workspace file. Okay, and I mean, it's not like it's that bad, but normally, I mean, I think I never met a trader who is happy to redo a workspace. Normally we kind of, you know, strongly dislike it. Let's put it this way, right? It's like, oh my God, now I need to redo my workspace. We don't like it. But if you have a problem like that, you know, it's worth it to try to redo your workspace with a new file and overwrite the prior file, because many times that would solve the problem, because sometimes TradeStation, for whatever reason, normally due to internet connections with sometimes delays and stuff like that, for whatever reason, this corrupts files, and this produces those weird errors I was mentioning a minute ago. Okay, so take a look at that, Lisa, just as a suggestion. Okay, Geneva, I love the metrics. Yes. Maka Mod, that's my question too. Will we include swing trades in the session, Jose, sometime soon? Yes. And by the way, Maka, I have your question coming in the Word document too, so we're gonna talk about it a little more in depth today as well. Okay, Lisa, how many charts can we safely have open with UFOs? I have been having some crashing issues. Okay, good. So again, we need to be sensitive. Okay, when dealing with TradeStation, we know we have in our hands one of the most advanced charting platforms in the whole industry, and I mean it, guys. Okay, there are some charting platforms that are only available or almost exclusively available for big institutions. Some such as, you know, the Bloomberg Terminal, or a platform called TT, that stands for Trading Technologies, or a platform called CQG, which is very professional as well. And I'm saying that normally those platforms are available for professionals only in the financial industry, because it's not like you cannot get it for yourself. It's just that they're super expensive. Okay, it's like you want to get a Bloomberg Terminal for yourself, and it may cost you, the minimum version maybe $8,000-$10,000 a month just to have access to the terminal. So for normally retail traders, we don't use that. Okay, but the reality is that the functionality in TradeStation is just as cool. Okay, and that's why I said that we have a very powerful platform in front of us. The problem, okay, again, I guess that in life nothing is never perfect. Okay, the problem with TradeStation, if you wish, is that the core architecture is 32-bit, and therefore, no matter how powerful your computer is, the amount of resources that TradeStation will be able to use from your computer are limited. Okay, no matter how powerful the computer is a matter of how TradeStation has been programmed, is about software architecture. Okay, so you need to be very sensitive. Okay, and in my case, when I'm running many charts, because it also depends on you. Some of you may be like, I'm just gonna trade the Euro futures, that's it. Okay, and you trade that market, that's the only thing you trade, which is fine. Some of you are gonna be like, I just want to be super active. I want to have 10 markets surrounding me. I got 10 computer screens. I want one TradeStation per computer screen. Okay, so if that's the case, okay, it's gonna be a challenge to have so many charts open. Okay, so one thing you wanna do is to really limit the amount of candles on the chart. Okay, in my case, let me show you. I am using 144 candles on the charts above, and it's more than enough to find the UFOs I need. And I am using, in the reactive time frames, I am using 55, as you are about to see. 55 candles is really nothing, and this really takes very little of your computer power, as you can see. And that's more than enough for what I need. So minimize the amount of candles on the charts, okay? Then another thing you can do, if you tell me, but you know what, I really need more trade stations, and let's say you have minimized everything and you still got crashes because you do need to run so many charts. Well, then what you will need to do is set up for yourself some sort of what is known in the industry as a VPS, which is very commonly used by traders. I use many VPSs for myself. So let me load a VPS so I can show you how those a VPS looks like. Okay, so this is a VPS, okay? And VPS stands for Virtual Private Server. So as you can see, basically, what I'm sharing with you now is another computer, which is not my computer, which is running on the cloud, where I can get another trade station running here with X amount of charts. And then if you were to have 3, 4, 5 logins with trade station, then you can have 3, 4, 5 trade stations running at the same time, and you can have as many monitors as you want with those VPSs. Is that making sense? And now you basically solve the problem of having too many charts. Okay, everybody with me on that? So little technology trick, okay? But again, this is just to take it very far, okay, guys? Very far. This is only if you are a trader machine, okay? Which I'm sure some of you are, okay? But normally, most traders would just focus on a collection of markets, and normally if you really diminish the amount of candles, you should be fine, okay? But Lisa, please, keep interacting with us if you need help. Reach at tradewithufos.com. And we'll keep giving you advice, okay, and we'll help you on trying to stabilize trade station, okay? Dirk, like the long green bar on the matrix when I'm right. Yes. Good. Devan, red, trend is down or up? DMI, okay, well, the definition of the trend is not only done by looking at the DMI and looking at the color. Is done by looking at two things. The first thing that you do is ignore the last candle. We don't look at the last candle. Okay? Your focus is the prior candle. And when you look at the prior candle, what do you see? You see an average and you see a close. So for you to determine what is the direction of the trend, you need to look at where is the close relative to the average. If the close is below the average, like it is, then the trend is down. And once you know the trend is down, that is when you look at the DMI. Okay? Only then you look at the DMI. And if the DMI is red, it means the trend is down and very strong going down. If the DMI was to be red, then the trend is down but weak. Okay? It's a weak trend to the downside, and this impacts how we set targets. If the trend is going down but is weak, our targets are closer. If the trend is going down but is strong, our targets are further away. Okay? That's the concept. Okay? Devan, let me know if I did answer your question or not. Bojan, yes. Oh, you just answered your question. Wonderful, guys. Yes, the chart reference again? Absolutely. Yes. So here's the chart reference again. Here we go. What else? Orlando. How are you, Orlando? Jose, how should one reconcile the picture that those 5 charts provide when considering a trade? What is the rule to follow? Sorry for asking this again. Sometimes I see conflicting signals. Okay, well, if you see conflicting signals, it's because you are allowing your eyes to move up and down, right and left. Okay, your eyes needs to be focusing on one chart at a time and only one chart. Okay, one chart at a time and only one chart. You don't want to keep looking for the answer you want by keep looking at all charts consistently, which is a common thing we all do at some point in our trading career. At some point, you know what you like because you understand the methodology and you know it works, and you want the market to match your rules so you can take a trade. So you know what you like, and therefore you keep looking to see if you get to see what you like. And next thing you know, you get conflicting signals, you get confused and things like that. So again, it's all about step by step. Okay, and what is the first step? Well, you probably remember the first step is to work on that below chart. That's the only thing you do. You look at the below chart, you look at where is the close relative to the average, and you look at the DMI. And now you know what's the trend and you know if it's strong or weak. And out of doing that, now you're gonna set the target based on the rules. And this is also done looking at this time frame. And now that you know the trend in which you are and you did step 2, the targets, step 3, now you're gonna go ahead and look at that number. So again, you are looking at that chart and that chart only. And once you get this number in your mind and you memorize the number 65, so now you go back up to see if you got, anything around 65, anything around 65, anything around 65. And guess what? You do. So now you plan the trade, and in this case, you are focusing on this chart. Okay? And the only time where you are allowed to look at the 3 charts on the top at the same time is when placing the stop. Because if you were to have overlapping UFOs, okay, sometimes you may place the stop in this location, right above the UFO, but right above the UFO in that chart may be that location, which would force you to push it up to the white space. So in other words, that would be the time where now you are looking at the 3 charts on top. Okay, and by doing that, you should know if you have a trade or not. Okay, and there is nothing else to look at. There is nothing else to be confused about. Okay, very simple. Okay, even though I totally get you, because it's much easier to be said than when you are applying this on your own. Okay, and then you got other things going on in your life, isn't it? And you just had a phone call, and then you heard something somewhere, and then someone told you something, and you got different things going on in your brain. So and you are, if you wish, at that time isolated because you are with yourself, with your computer in your office. Sometimes it's very easy to get confused. Okay, so that's why we do the get-togethers, so I can keep reinforcing by repeating, just like our moms and dads did for us, isn't it? Repeat works, isn't it? So I keep repeating certain things, okay? So in the end, it clicks, okay? That's it. It's that simple. So you guys are doing a very good job asking those questions. Good. Oh, Lisa, you are saying that you already spent an hour on the phone with them, okay? So look, Lisa, I do identify something based off 2 questions that you have said, or 2 comments. Number 1, you are stating that you experience crashes with your computer. It happens to you, and it may be the UFOs, but it happens to you as well when you are using chart trading. So this to me is a red flag in the sense that you may have a corrupted workspace file. Okay, so I would like to suggest, if that's okay, that you create a new workspace, add a brand new chart, don't copy a chart from somewhere else, just add a new chart, reset everything in the workspace, save it, okay? And then on Monday when the market opens, tell me if it's working fine or not, okay? Because I would be pretty positive you're gonna be fine, okay? In any case, contact us, okay? We have done at times, when needed, we have done one-on-one calls where we have controlled remotely some app users' computers to look ourselves directly into TradeStation and see what's going on, okay? So we'll be happy to do that for you, Lisa. But at the same time, based on what you just said, it's really looking like maybe you have a case of a corrupted workspace file, okay? So it would be healthy to do that, okay? Good, so one more. I can see there are many questions, okay? But what I'm gonna do, just to be fair, I'm just gonna go back to the Word document, go over page 2, and then I'll come back to the live questions, okay? How is it going so far? Everybody okay? Everybody okay out there? Okay, yes, Lisa, I see your comments. Okay, again, just count on us. Okay, just keep doing what you're doing in the sense of the tests that you are doing on your own. But if you, in the end, if you are stuck, don't just allow yourself to be stuck. Okay, just contact us and we'll connect with you and we'll take care of that. Okay. Good. So very good. So fantastic. It seems that everybody's doing well. So I will continue with the live questions in a minute. For now, let's take a look at the Word document. Okay. So question 1. The question one here says, obviously there is the replay facility for backtesting if one is using TradingView, but could you please consider recommendations on how to backtest for those of us only using TradeStation, okay? Well, again, what did I just say earlier? I said TradeStation is amazing, okay? That's what I said. Yeah, but like everything in life, nothing is perfect, okay? I did say that as well, right? Well, TradeStation does not have a tool to do backtest the way TradingView has, which is market replay, okay? And by the way, that's one of the reasons why we developed the app for TradingView too. So if some of you want to have it, you can use the market replay functionality, okay? Even though, let's say you really want to focus on TradeStation, but maybe for a couple of months or whatever, you can activate the TradingView app, do your market replay, and then, just move back into TradeStation, because TradeStation does not have that functionality, and this is not something we can change, okay? Now, having said that, even though there is no backtesting functionality in a way like TradingView does, let me show you in case not everybody has seen it, because really it's cool, like no joke cool, okay? So with TradingView, okay, let me go ahead and open a new TradingView chart here. I'm just gonna do it with one chart. Okay. Hey, come on. Okay, is my internet okay? I would say so. Okay, not sure why it's not opening a chart. Okay, so you know what? I'll just do it with this one here. Okay, so for example, let's say you want to backtest, I don't know, the euro. Let's go with the euro. Okay, and your methodology is a methodology by which you want to go with the trend. You are using the 4-hour time frame, 240 on the top, right? Basically you are doing the 240-21 methodology, right? Which is 240 on the top, 21 below. Okay, I'm using 21 minutes, 21 range, and I'm using the 240-minute time frame to look at the trend. Okay, the traders here with us today that you have been attending the sharpening sessions on intraday trading, you know what I'm talking about. Okay. And then the two time frames on the right, for now, I would like to ask you to ignore them because this is going to be the reactive time frames. Okay, so ignore them for now for this little backtest demonstration. Okay, so what would you want to do? Okay, so for example, let's say you want to begin backtesting, right? And you're like, okay, so let's backtest, and of course, to backtest, you will need to collect a decent quantity of samples, so that way you can have results that are actually meaningful. If you were to backtest and get 5 samples, that means nothing. So you will want to go far in time. For me, to keep it simple here, not to use too much time, I'm just gonna draw a vertical line. Okay, I'm just gonna draw a vertical line where the last change of trend took place. Okay, this vertical line, okay, as you can see, represents where we went from close above the average to close below the average. Okay, so the trend changed at that moment in time. That's when the trend changed. Okay, and if I was to zoom out, okay, that vertical line is actually the same I have above, and you can see this with the time, which is 5 p.m. In this case, because it's a 21-minute time frame, you don't have 5 p.m. 00, but the nearest you have is 16:54, which is the same time frame. Okay, and by the way, TradingView is cool in the sense that if I move the line, it moves it on the left too, as you can see. It moves it below. If I move it to the right, it moves it to the right below as well. Okay, so everything is in sync, right? So what would you do? You would be, okay, well, I want to take this trade, right? I want to take this trade, but I only want to do it if I got a UFO lining up with the moving average. Okay, so what do? You will now come below in this bottom chart where the UFOs are. Okay, because I got my UFOs flying saucers activated on the below chart. On the top chart, I only have the EMA. Okay, well, I also have the UFOs, but notice how they are hidden. Okay, because I don't need them at the moment. I only need them for targets. So I minimize the amount of information in the screen. And so what will you do? You will now click the replay button. And the moment you click the replay button, it will give you this red line that I'm gonna place, okay, where the purple line was. And this automatically will kind of rewind TradingView to that location, and it will show me what's available. And what's available at the time is I got a UFO at 12:52, okay? 1252, and if I go back above, okay, now I need to move to the next one, isn't it? The next one is right there, okay? This is 4 hours of time, okay? 4 hours of time. And the next candle, it's pointing at a moving average located at, well, I need to change one setting here so I can see the, actually I need to do it right here. Let me see. I need to do it. Interesting. I should have a setting here, which I don't find. Interesting. If I do settings, okay, I guess it does it for everything. So if I'm gonna get into settings here and I'm gonna move for indicator last value, background, indicator values, okay? So when I add indicator values, okay? Interesting, it's doing it below. Okay, let me do one thing, guys. I'm not sure if the market replay is the reason for this little problem. Just give me a second. Interesting. Okay, so I'm just going to right click on settings, okay? That's another way to do it. So right click settings, and in the background, I'm just going to click indicator values. When I click indicator values, take a look at the line on the top, and you'll see what happens, okay? Right click, settings, indicator value 1, 2, 3. See what happened, guys? It just gave me the value. Okay, it just gave me the value that I wanted to see. Okay, so that's what I needed. Okay, guys, this is what I needed, and this is what I was trying to do. Okay, so again, we are back to this candle now. If I put my mouse in this candle, it's telling me that the average is 112. Okay, so I will want to short at 112. I will want to short at 112, and the question is, if I use my market replay, in the right chart, okay, I'll put my line. Okay, guys, let me restart because I have my purple line in the wrong place. Remember, the purple line needed to be here. Here we go. So let's start again. Sorry to drive you crazy. Okay, so reset. Purple line on the top, located where the change of trend took place. Click on market replay and get my red line where the purple is. So it rewinds the market to that particular moment. Okay. Next step, I'm going to move the purple line into the next candle and look at what the average is, which is 112. Right? And now I'm going to look for UFOs, which are 112. Okay. And I got nothing. I got no UFOs that are 112. The one that do exist is 112.52. Okay, so what do? Nothing. I wait until I click play, and I wait until that market gets to the purple line. Okay, here we go. So it got to the purple line. Okay, so now that it got to the purple line, I'm just gonna update my line to the next one. Look at what the average would be. As you can see, the average has now moved down to 111.95. So now I will be looking at UFOs located at that price, and I do have one. This UFO is located at 111.97. Okay, it's just, you know, a little bit above 95. Okay, in the case of Forex, I will take it. In the case of futures, I will not. We'll need to talk about that when we conduct Forex sessions because of the nature of Forex being non-centralized. I am more tolerant with the prices. Okay, less rigid. And now you know this UFO would qualify as an entry, so you will plan an entry, stop, and a target, right? And now you will click play, okay, and see what happens. A new UFO form, another UFO form, and it never came back, right? So now we got to the line. I click pause. I would move to the next candle. Okay, the next candle is, the average is 111.91. So what do I do now? Go back to my replay functionality. 111.91 happens to be in the middle of this, okay? So now what I will do is merge those two UFOs, treat it like it's one, and if the market comes to any of those two red UFOs, I will be short. So let me see. And 4 hours later, price didn't come to the UFO. So as a trader, you're still waiting. So what do? Move the line. This is when patience pays. You guys see that? So you move the line. The new average is 111.88. So still 88 is above 84, isn't it? So we're gonna take the trade same way. Okay, if it comes to us into this red area, we'll take the trade. Let's see if it happened. You click play. Get to the purple line. Hasn't happened yet. Okay, I'm looking at the past average, Lisa, where the purple line is. Okay, so looking at when I look at this, okay, notice that I don't look at this number on the right. Notice that I look at the number on the top, which is 111.86. Okay, so I'm looking for 111.86 as an entry. 111.86 is above 84, so you are ready to take the trade at this price, isn't it? Again, merging the two UFOs as I was suggesting earlier, like it's one because they are basically overlapping each other. And now you click play. Okay, and we'll see if it came to us or it didn't. Not yet. Okay, so we pause, move the candle to the next one, right? The next one is showing us 111.84, right? So we are still ready to take the trade. Okay, still ready to take the trade here. Okay, let's see if that market is coming to us or is not. Yep, we just got filled. Okay, so you're in the trade. Okay, and again, we need to now look at if the target is met or not or whatever. I'm just gonna speed it up, so you get my point. So I'm just speeding up the market replay. Okay, so and finally this thing started going down. So again, in this case, you know, you entered at this price, okay, and that market started moving your way. So, you know, that was the time where it got very close to the average, and from there it started falling. Okay, that's what you caught. Okay, and again, with the market replay methodology, notice how powerful this can be. Is that making sense? So the question that we have in the Word document, it's very valid. Okay, very, very valid, you know, because it would be great to have this functionality in TradeStation, but we don't have it. Okay, so I cannot, in TradeStation, I'm going to give you a little trick on how you could backtest, just so you know, but you will see how it's very limited compared to what I just showed you, because I believe, and if it's not the case, please let me know, but I believe that all of you understand the massive power of what I just demonstrated here. Okay, this is a fantastic tool in your learning, in your building of confidence, in you looking at different cases that happen in the market before they happen to you. So this is not a joke, it's a powerful thing. But again, back to TradeStation. So first of all, with TradeStation, you could certainly go ahead and change dates. If you double click on those candles or you right click format symbol, you get to a menu and you can change dates. You could change dates, right? So you could say, so for example, here, let me see what we have. For example, 5/14, right? So let me see. So let's say you want to go back in time to 5/14. So you go back in time to 5/14, okay? And the moment you click OK, this is how the market looks like, okay? You know, let's say you had a UFO and you plan a trade. So now you can go ahead and say, okay, so let's go back to 5:15 and see what happens. Or let's go back to 5:16 and see what happens. Or let's go back to today, 5:18, and see what happens. Okay, you could do that. Okay, but of course, you get the whole data corresponding for the whole day. You don't get one candle at a time unless you do a daily time frame. You get the whole data corresponding for the whole day. Okay, so it's tedious, it takes time, and the precision is less. That's why with the TradeStation app, we built the UFO performance stats to be able to kind of get to the same conclusion, especially when we talked about confidence last weekend, to be able to get to those levels of confidence and understanding what you have in your hands without having the tool. Okay, so again, question number one, what is the little tip, the little trick to do backtest with TradeStation? Right click, format symbol, change the date, or double click on the candles, change the date. That's the little trick. It's not as complete, compared to what is possible with TradingView, okay? So very good question. Question number two, for swing trading using the trend on the weekly and the daily time frame, please, can you suggest edge and reactive time frames in minutes? We can look at shares and ticks for ourselves. Good. So that was the answer, okay? Actually, not that one. The answer should be, oh, wait a minute. It seems that I have closed that file by mistake. Here we go. This will be the answer. So you have on the right, daily, weekly, and monthly. That's the common time frame that we use to assess the side in which we should be. Should we be long? Should we be short? And then you have the edge time frames, okay, where you have 55, 144, and 377. Okay. For stocks and ETFs, I would just go as far as recommending that you don't need to use share bars and tick charts, because you're gonna make your life way too complicated. Okay, way too complicated. And here we do have range timeframes, which is something I will need to explain in a different time. Okay, because today is a Q&A, so tempted to talk about it, but at the same time, our time today is for questions and answers. Okay, so the answer to your question is coming on the right part of this table. Okay, what's inside the blue box, it's what you need. Everything else on the right, we'll need to explain it. Okay, good. Perfect. So we are done with page 2. Very good questions, guys. Okay, very good questions. Let me take a look at live questions. Okay, and I'm about to give you a break as well, guys. Okay, we'll take in a few minutes, we'll take a break, and then we'll continue. Okay, so let me see. Let me see. Okay, yes, I found where I was before. Lisa, you also found out the clock is not progressing in the lower interest station. You need to kill it and restart. Okay, well then, something is really weird, Lisa. I think that the install that you have may not be proper, or again, apart from having the workspace file corrupted, it may be the desktop file too. So I would really suggest a very, very intense cleanup, okay? Ideally, even if you can, install TradeStation into a different computer. And once you have TradeStation running in a different computer, then you back up your current TradeStation and you restore it in the new computer. And if the restore on the other computer works on the new computer, but doesn't work well in the old computer, then it's an install problem. All of this is super tedious, but at the same time, you have to do it in the sense that what you don't want to find yourself is trading where you feel that anytime your TradeStation may hang and you may not be able to control your trades, and that's not gonna allow you to focus properly. Okay, so that time is a little bit of pain, but it's worth it. Okay, so that's my recommendation. Dirk, I have at least 15 workspaces open all the time and no problems. Need a lot of video RAM, etc., etc. Yeah. Lisa, so you need extra accounts. No, you could have multiple usernames, even though you have one account only. TradeStation will likely charge you for the additional usernames. So sometimes it's actually cheaper to, TradeStation now, if you found an account with 500, they will not charge you for the platform and the data fees. So maybe it's worth it to just have 500 unutilized dollars in another account, so you get a free username. You know what I mean? And you can do that 3-4 times, whatever amount of times you need. Okay. If you guys ever need assistance with TradeStation on account opening, we have a very nice guy that work with us as a company. So if you get into, let me show you. if you do, I'm typing it on the comments box, okay? www.tradewithufo.com/TradeStation. Okay, so if you do that, let me show you. So tradewithufo/TradeStation, if you were to do that, automatically it's opening for you TradeStation. Okay, notice how even though you type AutoUFOs, actually what it opened was TradeStation. Okay, but look what happens when you click register or add new account. Automatically you got this guy in place, this gentleman Bradley Garris, which is a gentleman located in Chicago physically, and he's a very nice guy. Okay, so this guy can contact you as you do the application, and you tell him that you work with us. And I mean, in theory, they're supposed to assist you very well, no matter if you work with us or not. But we are all people, I guess, and normally that helps for a little bit of a smoother interaction. Let's put it this way. So let's keep going. Devan, if we have 2 logins, you need to pay twice. Well, actually, you can do the little trick that I just told you, and then you don't need to pay. You do need to lock $500 in that new account, okay? And by the way, little secret, the minimum account opening for equity account with TradeStation is 500. The minimum account opening with TradeStation for futures is 5,000. But if you found a futures account with 500, they'll take it. Okay, so I mean, I'm not saying $500 is enough to trade futures. I'm just saying that if you need an extra username with data feeds for free and platform for free, you can just allocate $500 into that account. You are not going to use it to trade, okay? And you still got the data feeds and everything. And even though in the website it says 5,000, they'll take 500, okay? By the way, with 500, you could actually trade the micro E-minis, okay? We need to talk about that too one day. I was looking at it. I mean, this is a new product that has recently been launched. And I have to say, I'm quite impressed with the liquidity. It's looking good. So for people trading with very small accounts, it seems that you'll be able to trade the S&P or the NASDAQ with a contract which is 10 times the size. So instead of $50 a point, it's $5 a point. Instead of $1,500 of margin, they will require $175 of margin per contract, which is super small. And now you can trade. Okay, so just letting you know that this is out there and it's looking good. Okay, I have not traded the micro E-minis myself yet. I'm just waiting for more evidence of liquidity. I'm not in a rush, but it's looking good. Okay, just letting you know. What else? I installed a video card with 8 GB of video RAM for each pair of monitors and 30 GB of RAM on the motherboard. I'm about a dozen workspaces as well, no issues. That's a monster machine, okay? And what's again, many of you in this room know better than me about technology, but in my mind, what is working very well there is the gigs that you have in the video card. This is what's really, really helping you, in the sense that the 32 gig of RAM TradeStation can only use 4 because it's a 32-bit architecture. No matter how much RAM memory you have, if you had 16 instead of 32, typically it would be about the same because TradeStation cannot use more than 4, okay? Good. So Lisa, Devan, seems the best option maybe have a second account with TradingView. That's a possibility too, but remember with TradingView, the data fees are free for Forex, for cryptos, and for stocks. For futures, you have free data fees, but they are 10 to 15 minute delay. Now, for backtesting purposes, not a problem. You have the whole thing is free, okay? But again, if you want to trade using TradingView, then you will need real-time data, and the data fees on TradingView are not too cheap. So I would recommend the route of TradeStation the way I said, okay? Good. John Clifford. Very good. When intraday trading and the market moves quickly, sometimes it does not come back to the 15 common time frame EMA. Would you ever go down and use the 5 minutes as the common time frame? The answer is no, John. The answer is no. I mean, if you do that every day you trade the 5, then yes, take trades on the 15 and the 5. But if you were to one day decide, you know what, today I'll do the 5 just because the 15 is not giving you a trade in the time frame you expected to take the trade, then basically what you're doing is that you are breaking the consistency of your method, and you're just trying to have the market look like what you want it to look like. Okay, so you are pushing it. You are in a very smart way, but you are forcing a trade. Okay, so again, one story is that you tell me, but you know what, Jose, every day I use the 5. Okay, I use the 5 and the 1 minute. I do this, the same, this table here. Okay, I do the same table, but my common time frame starts with 5, not with 15. You know what? Then it's fine. But if you do it one day only, just because that day the market is very volatile, remember, how do you know the market is volatile? You know it because it's already volatile, which means that it may stop being volatile the moment you believe it's going to be volatile. Okay, so it may not be the right time to decide that. Okay, so if you do it every day, yes. If you're going to improvise, no. Okay, just black or white. Okay, so clear question, closed answer. Okay, very good. So guys, I can see more questions here. Okay, but I think it's time to give you a break. Okay, so we're gonna have a 5-minute break, and as we come back, we will continue with the questions. Okay, guys, we have many more, and I think the content that we are covering today it's quite impactful, guys. Okay, so good job again. See you in 5. Hello everyone, we are back. We still have 30 seconds, but I wanted to confirm that you hear me. Would you mind to just type a yes for the sound check in the comments box, so that way I know that you hear me and we are ready to go. Wonderful. Thank you so much, everybody. Very good. So we are done with the countdown. Okay, so let's go back to the written questions. Okay, and we'll keep going on the written questions, and then I'll come back to the live questions. So question number 1 here, scanner. You've covered it in several sessions, but if you could briefly show us the parameters again, that should we modify, and when should we do that? And how can we apply it to Forex market too? That would be great. You've discussed Forex application in your December 19 session, but the sound was breaking too much and I was not able to follow what you were saying. Okay, good. So let's talk about scanners. Okay, so the scanner is in TradeStation right there. Okay. So first of all, if you don't have the scanner, just know that you can email us requesting it and we'll email it you back. Okay, so you can just import it into TradeStation and you don't need to build it yourself, because building it yourself is a little tedious. Okay, now of course, if you are a perfectionist, and I'm sure many of us are, it's always interesting to get to understand the intricacies of it. Okay, when you click format, there is a bunch of things going on here. So what is it that is going on in the scanner? And then you were also asking about Forex. Okay, so before we get into the details, okay, I want to rephrase that. The bottom part of the scanner is what we are using every week for longer term trading when using options. Okay, all those 4 scanners are designed for options because they have options data built in. Okay, so if you want to trade stocks without options, I would recommend to build different scans. Okay, so this is for options, even though the underlying asset is stocks. Okay. Now, on top of that, we have 2 groups. The group on the top, which is directional trading, or another way to say that is debit trades, okay, D for debit, and the group in the bottom, which is credit trades. The 3 in the bottom is credit trades, even though non-directional doesn't say it, but it's credit trades as well, okay? And within credit trades or non-directional, you have 2 cases, which is totally non-directional, which is the one below, or somehow non-directional, okay, which is what we call neutral, okay? So if you are directional, you have the directional long and directional short. This is very standard in trading. This is what happens in all assets. But with options, you can also make money while the market doesn't move too far. And therefore, we are doing the neutral or purely non-directional trades, okay? So again, I cannot get into more details about that because it will consume a lot of time and we have option sessions for that. But what I will say is that the differences between those guys is, number 1, for the debit trades compared to the credit trades, what the scanner is doing is looking at very underpriced options for debit and very overpriced options for credit. Okay, how do we do that? Well, if you look at the format, when it comes to implied volatility, is looking at the bottom 50. So it's looking at the 50 stocks with the cheapest options available in the market. And then there are more criteria, and that's why you don't get 50, you got 10. Okay? But we are looking for the bottom level of implied volatility. Another way to say that is cheap. If we were to look at neutral, for example, where is credit, and therefore we're looking for expensive, so notice how the implied volatility, we are looking for not the bottom, we are looking for the top, as you can see. Okay, so we are looking for the expensive options. Okay, so first difference when you compare the scans for debit and the scans for credit is that the ones above are looking for cheap options, the ones below are looking for overpriced options. Second difference is that on the top, the 2 with the word long are looking at stocks in an uptrend. The 2 with the word short are looking at stocks in a downtrend, where non-directional doesn't look at the trend at all. Okay? Doesn't look at the trend at all. It doesn't care if the trend is up or down or sideways. It doesn't care. Another difference is that the directional longs not only look at the trend being up or down, okay, it also looks at the trend to be strong. And this is done by using an ADX, okay, greater or equal to 25. Okay, so not only is an uptrend or a downtrend, but that trend is strong, ADX greater than 25. Where the ones that are neutral, okay, the ones that are neutral are looking at the trend, but they will take anything less or equal 25. In other words, what you don't want for the neutral is a strong trend. It's okay for the market to be trending, but you want the trend to be weak. Weak means less than 25, right? And the non-directional, as I said, doesn't look at the trend, doesn't care if it's up or down, but certainly looks at ADX to be less than 25, because you don't want the market to be trading strong when you are doing non-directional. Okay, so this is the summary of what all those figures mean. Okay, so just to go over one example, this is neutrally short, for example. So you have price of the stock greater than $15. The volume average in the last 3 months, more than 500,000 shares. The average, okay, average number 1, it's below, okay. What does that mean? That the market is going down, and same condition here with another moving average being greater. So what does that mean? So the overall trend is down, but while the overall trend is down, okay, so you picture a stock like that, you have a little bit of pullback to the upside. That's what this scanner is looking. The overall trend is down, but a short-term trend is up. Okay, little bit of a pullback. Okay, and the trend is between 40 and 50. Sorry, the RSI is between 40 and 60. Okay, which is one way on how to look at the strength. Okay, earlier I was talking about ADX. Okay, well, in this case where you can RSI, you know, RSI or ADX, both can be used to understand the strength of a trend. Okay, when RSI remains between 40 to 60 is just a normal trend. When ADX is below 25 is a weak trend. Okay. Anyway, what else? Forex and futures. Okay, well, Forex and futures, those two scanners were built a long time ago, and I'm not saying they are not valid, but they are quite incomplete if you were to think about everything that we have learned since December last year. And I haven't updated those scanners because it's been just a little too soon. First, because for intraday trading, it doesn't make sense to use scanners. Second, because for longer term trading, we don't use futures, we use options. So what I will do is when we cover Forex, which we need to do a proper session on Forex, then I will go ahead and update the scanner with more advanced stuff. At this moment in time, what the scanner is doing is very simple. It's looking at the 21 moving average and the 34 moving average, okay? And if the 21 is below the 34, it's a downtrend. So basically, what this is scanning is Forex pairs in a 15-minute time frame in a downtrend. That's what this is doing. But again, this is very incomplete. I am just showing it to you because we did use it in December as we were beginning putting pieces of the puzzle together. But Forex and futures are still incomplete scans compared to what options are, okay? So that's the answer to question number 1. So question number 2, also I'd like to get a scanner. Well, actually, that's easy. You just need to email us, rich@tradewithufos.com. Number 2, in the money and at the money concepts. How do we identify options that are in the money and out of the money, and for which option strategy should we apply them? Well, this is a question which is very good. At the same time, I could spend 2 hours talking about this. So I'm going to give you the short answer, okay? In the money, basically, is when you can brag about it. That's in the money. Okay? So let's say you have a stock. Okay? You have a stock currently trading at $40 per share. Okay? And someone or sometime in the past you bought the 40 call. So the question is, can you brag about it? Not really, because the 40 call gives you the right to buy at 40 and the stock is 40. Correct? But what if the stock keeps going higher? And now the stock is trading at 50. So now the stock is 50 and you have the 40 call. Do you have bragging rights? Do you have anything to be proud of? Yes, you do, because the 40 call gives you the right to buy at 40, but the stock is trading at 50. If you were to buy at 40 when the stock is trading 50, you can brag about that, isn't it? So that means the call is in the money. Bragging rights, that's in the money. And it doesn't matter if you bought it or you sold it. The call is in the money. You can be long and in the money call, you can be short and in the money call. Of course, if the call is in the money, you better be long, because if you are short and in the money call, you're losing money. Is that making sense? But putting on the side, if you are long or short, the call is in the money, not based on the fact that you purchased it or you sold it. The call is in the money based on the fact that the strike price of the call is 40 and the current price of the stock is 50. So does this call have bragging rights? The answer is yes, so it's in the money. What about, instead of the 40 call, let's say what you have is the 60 call. So same story. You have the stock is trading at 40. You've got the 60 call, right? So what is that call allowing you to do? The call produces the right of buying the stock at 60. But what's the current price? 40. Why would you ever, in your right state of mind, buy the stock at 60 if you could go in the market price and buy it at 40? You would never do that. So the 60 call doesn't give you any bragging rights. So what's the answer? The answer is that that call is out of the money. Okay, out of the money. And it doesn't mean you are making money or losing money. You can be long the out of the money call, you can be short the out of the money call. If you are long, if you bought the 60 call, you are losing money. Okay, but if you sold it, if you sold the out of the money call, you are making money. Why? Because this option doesn't give you bragging rights. The day of expiration is going to expire worthless, and because you sold it, you got paid some premium, it will become worthless on expiration, so you made money. Why? Because you are short and out of the money call. But remember, in the money or out of the money is not related to the fact that you purchased it or you sold it. It's related to the fact of what the contract right is compared to the value of the stock. Let's do a little quiz. Let's say the stock is trading at 40. You guys ready for the quiz? Everybody put your hands on the keyboard. You're gonna type in the money or out of the money in just a second. I'm gonna ask you a question. So you type ITM or OTM. So question, if you were to be given the 50 put, would you have any bragging rights? Does the 50 put implies bragging rights? Yes or no? If it's yes, type in the money. If it's no, type out of the money. Go ahead, guys. The 50 put, is it in the money or out of the money? Just gonna wait a few seconds. Very good, Babu. Very good. Very good. The 50 put is the right to sell at 50. If you have the right to sell at 50 and the stock is 40, you just made $10. I mean, it's not like you made $10 because it depends if you bought the put or sold the put, but that put has $10 of what is known as intrinsic value. Right? Bragging right. You got it. It was in the money. Okay, guys? Very good. Good job, guys. Number 3, would it be possible to have a separate session on Option Station Pro? Yes. And to be honest, as you suggest, it needs to be a separate session And just like I plan to do a session on TradeStation, I plan to do a session on TradingView. So I will be doing all of these, guys, okay? Because I think it will be good material for you to consult if needed. So yeah, definitely, guys, count on me to produce that at some point, okay? Yeah. In the meantime, by the way, there is a lot of content. If you were to get in YouTube, okay, if you were to get in YouTube and you type TradeStation, okay, so TradeStation, there is a channel here. So when you click TradeStation, there is a channel. And to be honest, they have pretty good material, okay, when it comes to how things work, okay? So they have playlists and all sorts of things. So click playlist, equities, options, trading tools, order bar, OptionStation Pro. Here we go, okay? So this is a playlist, okay, where everything in here, it's all about OptionStation Pro, okay? And they have multiple videos that may help you, okay? So you may want to take a look, but certainly I will also produce something for you guys. They have 91 videos, as you can see here in the bottom part, okay? 91 videos on OptionStation Pro, okay, guys? So and the beauty is that some of them are very short, so you can watch them very quickly, okay? By the way, since I'm using YouTube, everybody, as you are looking at our live broadcast today, click on the subscribe if you're not, click on the red bell if you haven't, so you get real-time notifications, okay? And within the session, go ahead and give us a thumbs up if you feel like it, okay? If you feel like it's a thumbs down, we'll take it too, okay? But thumbs up will be preferred, of course. Number 4, pre and post market UFOs. When do we need to look at them, for which markets, and why? Okay, so that's a very good question. Very good question. And again, we need to align ourselves to the nature of the markets that we trade. So you need to understand what do you have in your hands as you trade. For example, stocks are a fragile asset by definition. I mean, why? Think about it. The futures markets are 3 times the size of the stock market. So the stock market is small. Okay, even though the US market is the biggest in the world, it's still small compared to other markets such as commodities, futures, etc. So the stock market is small, but on top of that, you happen to have like close to 8,000 or something like that stocks in the US market. So if you happen to trade one, you are just using a tiny piece of the market itself. So that's why I said stocks are fragile. On top of being fragile, stocks are traded differently by different institutions. Some big players in the market, such as investment banks, Goldman Sachs, hedge fund managers, they may have no interest when it comes to some stocks, and they may have a lot of interest when it comes to other stocks. Okay? No interest at all with some stocks, plenty of interest when it comes to the other stocks. Now, let's say for some particular stock, there are 3 investment banks that are very big on trading that stock and the others don't. And let's say those 3 investment banks, because of how they trade, because of maybe they're located overseas, because of whatever that we don't know and we will never know, the fact is that that investment bank, let's say, most of the big orders that they place in that stock happens to be posted overnight before the market opens or after the market closes. Right? So what would happen if that was the case? Well, then you would get a significant difference in statistics if you were to compare the pre-market, post-market data compared to regular trading hours, right? So for example, with Starbucks, we got 55% UFO performance stats while I'm using US with pre and post-market. If I switch it to a regular session, I got 50Y21. It's almost the same, but still, notice how it's a little better with pre and post market, which tells me that in that stock, probably institutions are just as big in both pre and post market and regular hours. But it's not always the case. So one portion of your question was, when should I check it? Well, you should check it for stocks. For Forex and futures, you don't need to check pre-market and post-market. It's all just as important. But for stocks, it is a big difference because some stocks will have no trading at all, during pre and post market, or maybe the way on how they trade, they will trade the stock pre and post market, but then they cancel the orders. Okay, and therefore the UFOs will not work well at that time. And every stock is going to be different, again, because they are thin, fragile products. Okay, so for example, what if I look at Apple? So Apple has, when looking at pre and post market data, 59%. When you look at regular session, we have 48%. So what is that telling you? This is telling you that those big investment banks, those big players, they are doing much more of the key trading. You know, those orders are placed, and most importantly, those orders are left waiting to get filled where they were placed during pre and post market. Okay, so and this, by the way, could change through time. So that's why it's important to keep a look on those stats to know better what's going on. Okay. Other stocks may not be like that. What about Facebook, for example? So with Facebook, we have we're still pending data, so we'll see in just a sec. Take care, Andrea. Yeah, ETFs, Lisa, I see your question. ETFs and stocks is the same story. Okay. Now, if you look at SPY, I'll come back to Facebook in a minute. So SPY, with pre and post market data, you can see 49. With regular session only, you can see 50. Okay. So you can tell that the US session makes a little bit of a difference. But the problem with ETFs really is that those markets trade 24 hours non-stop. Okay. So here's what you will see. For example, gold. Okay. Or even the S&P. Let's not make this complicated. Like, for example, gold, the S&P, okay? The S&P 60 minute gives you 50, right? If I do pre and post market, it gives you 49. So because 50 is better, I'll do regular session. Now, what if I click ES, the S&P 500 futures? It's giving me 60. It's 10% extra. Okay. So what is the message I'm giving you here, Lisa? Well, if you're gonna be trading ETFs, the best way to do it would be that you decide when to buy and when to sell based on the price of futures, while you buy or short the ETF. But don't plan your trades based on the ETF, because the ETF is a fraction of information derived from a product which trades 24 hours. Plus ETFs have time decay. Let me rephrase that. ETFs got price decay. And therefore, the prices that you see on the chart are never going to be as accurate as futures. So if you were to trade the ETFs, you could certainly trade them, but decide when to buy and when to sell based on the futures. You can have what is known as a conditional order, where you say buy the ETF because the S&P futures is entering a 2848 UFO. Okay, you can do that with the platform. So Facebook, and I'll continue with the list of questions. So what do we have with Facebook? Still pending data. Okay, so we'll wait a little more, and it should be soon. Okay. It's taking a little bit of time. Well, hopefully it's not this. Okay, now remember what happened last weekend on Saturday? We got the TradeStation server maintenance that hit us. Okay, so I was crossing fingers that was not the case. So anyway, Facebook regular session 50%, Facebook US and post market 52. So again, just like Apple, more relevant pre and post market. But again, it's not always like that. What about McDonald's? Okay, I'll look at this as the last case. Okay, so it's pending data, so don't pay attention to 32 for now. Okay, I'll come back in a minute while it's loaded. I'll look at the next question in the meantime. Iron condors. Just conceptually, I don't understand why call spread is placed above and bull put spread is placed below. Okay? I understand that put can be bullish and calls can be bearish, but I still didn't grasp it. Okay, so remember, when you do iron condors, when you do non-directional trading, what you are really doing is betting on where price is not going, right? And sell options in that place, right? So if you're right and price doesn't get there, then those options will expire worthless. That's what this is what this really is, correct? So that's why if you have a chart, right, where you have UFO above, right? And you have a UFO below, right? Sorry for the drawing, not so amazing. And let's say the price is somewhere in the middle, right? And you're like, okay, I don't think it's coming here. And I don't think it's coming here either. And let's say that here is 50 and that here is 60. Let's say that's the case, right? So what would you do? You would do a call spread. You would buy a call and sell a call. Why? Because a call spread is bearish, correct? It's bearish. And therefore, as long as that stock is below 60, the call spread will pay you. Okay, the call spread will pay you. What about below? You would sell a put and buy a put. That would be your bull put spread. Notice what I just said, bull put. Okay, so what does that mean? It's bullish. Okay, in other words, you get paid if that market comes here and then goes back up. As long as it's above 50 on expiration, this option will pay. So if this market is below 60 on expiration, the upper part will pay you. If this market is above 50 on expiration, the bottom part will pay you. Both will pay you, and that's an iron condor. So again, don't think in terms of being bullish or bearish, think in terms of where is price not likely to go. Okay, that's another way to think about it, and hopefully this is more intuitive. Let me see if we got McDonald's. So McDonald's with pre and post market is 54, with regular session is 53. So more or less about the same. You know, I was looking for an example where it was opposite, which sometimes it happens, okay? But it seems that in this case is not, you know, we looked at 3 examples and it was not the case, okay? But I think it's okay. So number 6, premium. What constitutes enough premium for different option strategies? Do they vary based on strategy? Well, enough premium means that you are not trading a stock because you want it, but you are trading a stock that is coming from the scanner, because the scanner is looking at stocks with the greatest premium. So having a starting point where you are looking at the highest premium, it's already a good starting point. But the ultimate confirmation that you have premium enough is actually the rules that we have when we say that we want a minimum of 15% of the difference between strikes. If you got enough premium, you will get your 15%. If you don't have 15 premium, you will not be able to pass this requirement, and therefore you will discard the trade. Number 7, I see that you'll be adding more sessions from June as part of premium membership, which, by the way, we have delayed that for a little bit. Okay, again, we are preparing a series of tools and things. Okay, so I'll talk more about that when it's the right time, if that's okay. But we just delayed it. Okay, so it's not going to be out in June. It's going to take a little more time. Okay, so I'm very interested, and if it's not premature to discuss what we'll cover in those sessions, I'd love to learn more. So again, it is a little premature. Again, it'll have a lot to do with combination facets. We'll get a little more advanced with things. We'll add a few more tools as well. I mean, you'll see. Hopefully it'll be interesting and it'll be helpful, guys, okay? But it's just a little premature, if you don't mind, okay? Is there a question for Saturday? Yeah, I'm just reading here. I understand. I'm looking for ways of accelerated learning. Yeah, certainly. I mean, that's a great place, my friend. Okay, it's a great place. Okay, and I'm sure you will learn a lot in the options class or the forex. The only thing is that the way I'm conducting some of the applications, it's not standard. Let's put it this way. When I mean standard, I mean standard in the industry. We're gonna be doing things a little more. How do I put it? It's a little delicate that you're asking me where I cannot show you, in the sense that I want to use the right words, and as you guys know, English is not my first language, so I want to make sure that I am respectful and delicate with my words. So let me give you an example, okay? Just so you understand. For example, when building a spread, okay, when building an option spread, I've been telling you things such as, so here's the strike that you get, here's whatever, here's the delta you need, here's, so, okay. So, you know, things that we're gonna do, okay, and you'll see, is like we're gonna get option chains, okay, for example, Starbucks, okay, and the moment you load Starbucks, okay, and you have the option chain and you have everything, instead of applying rules manually and get to pick strikes manually and get to observe the option chain manually, and it takes forever to plan an options trade, what we're gonna do is that we're gonna come in here in the search, okay, and we're gonna be like, okay, so because of certain rule, we are building a vertical. It's gonna be a vertical with calls only. I am buying because options are underpriced, so I want to buy. My target is located 2% above, so I'm shooting for a move up to 80.55 on the stock. I calculated my TTT, and my TTT says that I should reach target on June 18. And I have all those parameters, and then I'm gonna say, okay, TradeStation, tell me the best trades available. And the moment I do that, okay, the moment I do that, I'm gonna end up with a collection of possibilities, and then I'm gonna be sorting these out, and then I'm gonna be looking for the right expiration date. Let's say July is when the options, is when the earnings reports is happening. So let's say I'm gonna look at July, and then I'm gonna start looking at my delta, okay, and not only the delta, but also the delta when you get to the target on that date, and what happened to my gamma then. And based on doing that, I will say, okay, instead of that one, I'm gonna use that one, or instead of that one, I'm gonna use that one, and then I will just click place the order. Okay, so we're gonna do stuff like that, which, in other words, with much less options knowledge, you will end up with a nice trade. And it's not about not having knowledge, because I'm all about explaining the why we do things the way we do. It's about saving you time. Saving you time in getting to a place where you start trading, and then we can spend time adding more knowledge. But getting you trading is the key, because that's how you make money, correct? But also getting you to save time, not only in the learning process, but also saving you time in looking for trades in your everyday and having more opportunities to trade with less time invested in front of the charts, okay? So again, I've been, you know, I would say your question is answered now. Very good. So back to the live chat, back to the questions, okay? And by the way, I would love it if you guys were to share with me if what I just said makes sense to you, okay, or it doesn't, okay, and if you would like me to do that or not, because sometimes, of course, with great intention, I will be thinking of ideas that I believe can help you, but maybe not, okay. So again, I often mention teamwork, okay? So in this case, I would love to hear your feedback. Let me see. Oh, yes, I can see Andrea was asking a question, but she left already. So I will answer her question in the next session so she can be with us. Yes, Bojan, you are right. Yeah, TradingView, it's really powerful in that sense. Let me see. I am just reading, guys, catching up with what you commented. The code for micro minis, very good. I can see, dear, you shared. Yes, MES is for the S&P, MNQ for the NASDAQ, MYM for the Dow Jones, M2K for the Russell, okay? Thanks for that. Alpha Intelligence, did you ever do diagonals instead of credit spreads? Yes, many times. I love diagonals, but keep in mind something very important, Alpha Intelligence. Diagonal spreads are very powerful when options are very cheap, where credit spreads are very powerful when options are very expensive. Okay, so it's a complete different type of animal that you are dealing with. They are both amazing strategies, but to be applied at different times. Okay, so just keep that in mind. Okay, when you do debits, instead of debits, you can do diagonals, 100%. Okay, when you do credits, okay, it's no time to do diagonals. It's because your scanner is telling you that you are picking the top options, in the sense the most expensive options in the market, the most overpriced. Okay, so credit is for overpriced, and diagonal spreads, which are debit, is for underpriced. Very good. Devan, why can't transition simply things? Well, 64 bits, it's easier to be said than to be done. Believe me, they are working on that. I know for a fact, but it's not a joke project. Okay, and the guys who are in technology, you know that. Mod, my UFO doesn't seem to appear in TradingView during replay. That is weird. I would suggest to use Google Chrome. I would suggest to erase all the cookies and cache folder of your Google Chrome, and you should be fine. That is a problem I never encountered. Dirk, Devan, the coding for TS, yeah, he was the technical comment. Yeah, not an easy one, isn't it? Yes, very good. Very good. Dirk, almost double the profit on the iron condors and the risk gets greatly reduced. Absolutely. Babu, bear call spread gives less profits. Bull put spreads almost give more profit because there is no buy put involved. Is that true? If this is true, why do we do bear call spread? Okay, well, many reasons, Babu. First of all, selling a put on its own is what is known in the industry as a naked short put. Okay, so the word naked, it's quite impressive for many people out there, in the sense that many traders get scared when they say, oh, I'm doing naked puts. Many people get scared. So in one hand, there is nothing to be scared about, because if you think about it, when you go long stock, if you don't use stops, you could lose the whole thing. If the stock goes bankrupt, you lost the whole thing, right? So you are naked too. Is that making sense? So it's not a big deal to sell options by themselves. Not a big deal. But having said that, because stocks are fragile and stocks could go bankrupt, you are indeed exposing yourself to unlimited amount of pain, right? And it's not likely to happen, but it could happen. And if it happens, it did, right? So what is one way on how to limit the risk? Is to buy a put against the put you sold. And that's what is known as a bull put spread. Okay, it's a bull put spread, and it's limited risk, because if you sell the 50 and you buy the 49, the most you can lose is 1. Even if the stock goes bankrupt all the way to 0, the most you can lose is 1. So doing spreads, which could be bull put or bear call or whatever, doing spreads by definition limits the risk. Okay, so that's already a great benefit. Okay. Second, you also need to differentiate when it's time to buy options and when it's time to sell options. You are right when you say that a bear call spread is bearish and therefore makes money on the way down, and you are also right selling that if you buy a put, well, you didn't say buy a put, okay? Well, yes, you did, okay? Well, you said it in a different context, okay? So let's bear with me. So if you were to buy a put, you would make money when the market goes down. If you were to do a bear call spread, which is selling the call and buying the call, you would also make money when the markets go down, okay? So your question is, so why would you do bear call spreads? Why don't you do, why don't you just buy puts? Okay, and the question is, the answer is, it's totally different. When you buy puts, you are a buyer of options. When you sell calls, you are a seller of options. And remember, options can be in two states. They can be very underpriced or they can be very overpriced. Remember, earlier in the scanner, I showed you the top options. Those are very overpriced. And I show you the bottom options. Those are very underpriced. So let's say options were to be very overpriced. If options were to be very overpriced and you buy a put, you just purchased a very expensive put. So yes, agree that if the market falls, you're going to make money. But because the put you bought is very expensive, if the market goes against you, you're going to lose a lot of money because it's very expensive. You paid for something very expensive. If you're wrong, you will lose a lot. So if the market was to give you options that are very expensive, that is when you do the bear call, which is basically selling, because you sell expensive. So you collect a lot of premium, which is good. And because it's a spread, if the market goes against you, the most you can lose is limited. Remember, if you do 50 and 49, the most you can lose is 1. If you do 50 and 51, the most you can lose is 1. Right? So you got paid a lot, and the most you can lose is 1. So in other words, it's not about what is best, the put or the calls, buying or selling. It's about, it's time to do what? That's the right question. Is it time to buy options, or is it time to sell options? And that depends on the options are in the scanner in the top, or the options are in the scanner in the bottom. Are options very overpriced, or are options very underpriced? That's the key. Okay? So hopefully this is clear, Babu. Dear Jose has an edge on options trading and has to be careful when it comes to other companies, especially OTA. Well, I think that the market's participants have to be careful with us, guys. We are a group of amazing traders here, and we're going to get all their money, isn't it? I get you, Dirk. And thank you for acknowledging that. Again, just following rules, my friend. We just find rules that are intelligent and productive and smart, and then we use the discipline. That's it. Very good. Yes, Orlando. Yeah, I know you like that. Maka, absolutely. Yes. John, sounds interesting. Really makes a lot of sense. Sounds great. I think that the Options Pro sessions is a high priority. Yes, I agree. Makes sense, and I would like to know more about using the search function. So we'll do that very soon, dear, okay? I do have a debt to be paid, which is I need to get deeper into Forex first, okay? And we'll do a few sessions on Forex, and then we'll get into that, okay? So Maka, how soon can we do that? Let's say a couple of weeks from now, something like that, okay? So we'll do Forex first. I think we can do Forex in one session, and then the session after we can get into getting deeper into options, okay? Jose, I sent you sheet with micros some minutes ago with the pricing and margins. Maybe you can show it quickly. That will not be possible at the moment, Dirk, with the computer I'm using, unfortunately, okay? But you know what, I'll display it next time, okay? Thanks for that, by the way. And again, talking about teamwork is great. Have you covered how to manage credit spreads in the options videos? No, I have not. I have covered how to build the spreads, but not to manage them. And this is one of the things that we will do as well when we get more advanced. We'll be doing, how do I put it? I mean, let's say you like sports, right? And let's say my favorite sport, Formula One, motorsport, right? So let's say you're a very good driver, but in the middle of the race, you got a massive problem with your car. And you know, if you are careful, you can finish the race, but instead of finishing first, maybe you'll finish fifth, okay? Obviously, that's not what you want. It's actually quite bad given your performance and the performance of your car. But finishing 5 is better than not finishing the race. And therefore, you may to get in damage control mode when it comes to driving. Maybe you're going to shift gears less often. Maybe you're going to be more careful in the curves with the use of the rubber of your tires. And this is damage control mode, right? So I want to introduce you to damage control mode when it comes to trading options, guys, okay? Because when you take a trade, two things may happen. It goes your way, it goes against you. So if it goes against you, we need to talk about damage control. Is that making sense? What can we do? Because guess what? If you still finish fifth, you get points. In other words, a trade that went against you may still pay you some. We'll be able to do that. Okay. Now it doesn't mean you will not make the whole profit. Okay, guys. If the market goes against you, it's a bad news. Okay. If your engine is not working well in the race, it's a bad news, right? But at least if you can do a little damage control and you end up with, some points, okay, some profits, okay, out of the trade instead of a loss, that's gonna be great. Okay. So I haven't discussed any of these yet. Okay, and we need to get into all of this. Okay. So, and again, this is basically, we're going through the same process that with options that we did with futures. Isn't it? If you go back in time to December, January, something like that, I gave you a methodology in futures where you would use the 15 and the 2-minute time frame, and that's it. There was no trade management, there was no nothing, right? But then next thing you know, now we have a much more complete methodology with many more rules and more time frames and more precision, and some of you are killing it, right? So we're gonna do the same with options, okay? It just takes a little bit of time to spend time together in the sessions to put it all together, and then a little bit of time on your side as well to practice it, okay? So we're going there, guys. I'm telling you, we're going there. Yes, Orlando. So next week is gonna be Forex, okay? Bojan grew up watching Formula One and love it, and MotoGP as well. Yeah, well, I hear you, my friend. Love it myself. Same here, Bojan. Watch almost every Formula One race on the neuro. Oh, that's fantastic. Love it. Don't get me started in Formula One, guys, because we're supposed to be doing Q&A, guys. You know, if you touch my passions, you know, believe me, I can talk about it. So so let's go back to the questions. I am studying to understand how to properly think about the situation with XQ and the Amron trades being so far in the red as earnings and expiration approaches. The earnings reports for these trades date is May 1st, expiration is May 17th. Well, actually, this question is 100% related to what you guys were commenting and my comment as well. The SQ and the Amron trade were trades that failed. Those two trades ended up as a loss. And again, it's part of the game, right? If you knew you were going to lose 500 per contract or 700 per contract, and you position size correctly and you lost what you were expecting, you know what? It's part of trading. Nothing wrong with that. Okay, of course, it's not the best news, but it happens and it will happen. And this is something that we all know. So again, what I can tell you, and I'm just repeating myself, is that we will learn techniques on how to change our mode to damage control mode. Okay, and we will be able to either reduce the size of the loss or end up with a small profit, okay, and still finish the race. Okay, guys, so we'll talk about that later on. Okay, so because they are too close to the maximum loss already, I see no reason to exit before earnings. There could be good earnings results which come. Yeah, so the question for me now is the earnings reports are bad? Yeah, exactly. Again, to answer that question, I need to teach what I haven't taught yet. Okay, more questions. Oh, you are just killing me, Bojan, with your question. I cannot reveal that. Okay. Yeah. Anyway, entry process. Where has the average preferably to be at the edge of the UFO? Okay. Inside, above, or below? Can you go again through the entry process, please, for a short or a long? So again, the question is, and I know sometimes it's tricky. Okay. And again, we will keep evolving as well in that sense, okay? Because what happens, guys, is that, okay, let's say we concluded that this UFO being located at 2864.75 is very close to the average, so you may plan a trade on shorting at that level. But the problem is that sometimes, as the price moves up, of course, our average reacts to it, and the average starts moving up very, very slightly, just a little bit. But now, next thing you know, let's say that was going to be 65, right? 65.91. So what's happening now? Well, 65.91 is actually above 65.25. And that may tell you, hey, you know what? I should not take this trade, right? And the challenge is that UFO that moving average is dynamic and keeps moving as price moves, right? And so, most of the times, because we're using such low time frames when we do intraday, it's kind of easy to anticipate, especially if you develop a little bit of experience and you practice it, you kind of eyeball it and kind of guess it. And even though that's a little subjective, you know what? In most cases, it's quite okay, Because in the end, you don't really care where the average is, okay? If the average, if I was to draw the average here, okay, this average, right? If I was to draw it on the short time frame, it would be a line coming something like that, okay? Something like that. Meaning that if this market comes back here, it's gonna hit the average and the UFO, and from there you would expect it to drop. So that would be your average, right? But again, the experience will kind of help you to eyeball more or less where that average is. Okay, that's what the experience will help you to do. But still, there are times where, especially when the UFOs are so narrow, where you may find yourself in a position where, what do I do? Do I wait? Do I place the order? Do I cancel the order? And if you wait too much, then you may be late, because it gets in. Sometimes you got this touch and go, and next thing you know, you didn't have time to place an order, or you had the time to place an order, but you didn't have to move your safety target, and you got taken at a profit, but way too soon, and stuff like that. Okay, and I'm sure this happened to some of you guys. Okay, so that's the origin of this question. So, the answer to the question is that anywhere, as long as the average is either in between the UFO, or even if it's at the edge, or even if it's at the very bottom, anywhere between the UFO, as long as that average is somewhere in between, is fine. Take the trade. That's it. Okay. The challenge really is as price moves towards the UFO, where the average may change. Okay. So the answer is inside. Okay. And to take care of that challenge, and I know I said that a long time ago. Again, I'm just moving one step at a time, my friends. We will go ahead and release a version. Okay. I said that a long time ago. And this will come either built in the UFO, or we just create an extra additional indicator that we'll put in the App Store, and that, by the way, we'll just put it out there for free. And that indicator, what it will do is to precisely calculate that UFO. And when you give it an input of, hey, what if price comes to that number? Where is the UFO? Where is the average going to be? Then you will get your answer. So then you will know if the entry is valid or not, okay? And, we'll develop that for you, and we'll make it available. But right now, and again, actually, it's actually almost even better that at the beginning you don't use a tool like that. So you get to kind of develop yourself and get to develop a little bit of feel for sensing the markets, if you know what I mean, even though your action is going to be all rule-based, okay? There is no improvising here or anything like that, okay? Let me see. Lisa, I turn intrabar persist off on the MA, so I don't see a prior bar. Well, that's a possible approach, Lisa. Okay, that's a possible approach. But at the same time, now you are not necessarily joining the computers, right? Because remember, if you right-click, format, right, and you go ahead and in properties, where was it? Intrabar. Wait a minute. I need to look at the indicator, not the candles, guys. I got distracted. So you go general for moving average exponential, and you disable update intrabar. Okay, this is going to update it only once per candle, and therefore you don't have the current update. Okay, this piece of the average basically disappears until next candle is formed. Okay, and therefore the average doesn't change. But at the same time, the calculation refers to the prior candle. And remember, we want to join those computers. Okay, so I would like to know the real-time value. Okay, but anyway, that could be a valid solution as well. Okay, it's not that big as a difference because it's lower time frames. Bojan, yeah, experiencing it firsthand now, seeing how price react when touching the moving average, especially if in a UFO, gives me extra comfort when placing a trade, which is something I struggle with before. Me too, Bojan. Very good. And again, you use a word that begins with C, comfort. And that makes me think of another word, right? Which is the word confidence. Okay? So you develop your confidence by doing the practice that you guys are doing. And that's why you're producing results, guys. Okay? So, long life to the UFOs, right? But it's you guys. Okay? It's you. And that's why, it's important that we get together, that you guys put some of your time and the effort into doing this. Okay? Because you need to develop yourself. Okay. Are your scanners using pre and post market data? If not, I have to wait for the market to open before I run the scanners. The scanners are using whatever data it's available at the moment. And when it comes to pre and post market, it would depend on how you have it set up. Because look at this. So if I move to my scan, and in my scan, I have formatted, right? And I'm looking at close, right? So close means close. If I want it to be pre and post market, I should select last. If I was to do last, okay, now we would be looking at pre and post market. Same apply for the moving averages, right? So instead of close, okay, you know, which in this case, let me see if it allows me to change. Okay, if you were to do last, now it's going to be utilizing pre and post market. But if you leave it at close, it will not. Okay, so you know, normally I run the scan before the market opens, so I'm ready for the day, and I run the scan once per day, and that's it. Okay. Yep. I see your approach to scan for trend inside the scanner criteria, but can you please explain the IV part of it? I don't see difference there for the short or the long trade on the same token. Yeah, so when you buy options, you want them to be cheap. Okay, so when you buy options, you want them to be cheap. So I'm looking at directional long, right? So if I form a directional long, my IV is bottom because I want options to be cheap. When I want to do the directional short, I'm still buying options. I'm buying puts now. I'm not buying calls, I'm buying puts. So I still want them to be cheap. So I'm looking at bottom. Okay, so again, when buying options, bottom. When selling options, top. Okay, when long, the trend is up. Okay, moving averages on top of each other. When short, the trend is down. Moving averages below each other. Okay, hopefully this answers. TTT, when we divide the dollar movement by the ATR, we already have days. So why do we multiply by 7? Because in the calculation of the TTT, we assume that 1 week, okay, 1 week of price movement, okay, movement equals 1 day net. That's the assumption. And why do we assume it like that? Because the markets don't go up in a straight line. Markets go up in, let's call it zigzags. Goes up, goes down, goes up, goes down, goes up. And if you think about it, I got 1 Monday, 2 Tuesday, 3 Wednesday, 4 Thursday, 5 Friday. In other words, 5 days, which every one of the days may move at a rate of the ATR, but because this would be a plus ATR, and this would be a minus ATR, and this would be a plus ATR, and this would be a minus ATR, and this would be a plus ATR, when you added it together, what did you end up with? Well, you ended up with plus, 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 minus, minus, and all of this is going to be net 1 plus. Okay, so daily ATR, right? So positive daily ATR, positive daily ATR, and positive daily ATR equals 3 daily ATRs. Okay? But then you got negative daily ATR, negative daily ATR, in other words, minus 2 daily ATRs. This is giving you a net, okay, 1 daily ATR per week. Okay? That's the calculation. Okay? And how many days a week? 7. So that's why we multiply times 7. Okay? You have calculated the room divided by the ATR. This is telling you days, right? But we are not assuming the market will move at a full ATR every day. We are assuming that you will have plus and negatives ATRs, okay? And with this assumption, you will multiply times 7 because we are assuming a 1 daily ATR of net price movement per week. Got it. My friends, I still have questions, okay? So I'm gonna keep going for a little more, if that's okay. Okay, I would like to complete the questions. Okay, so that way the next day we can go ahead and focus on the forex. Okay, Maka, is there a way to do TTT for forex? Yes, you can do the same calculation, but it's not needed because the TTT calculation has to do with selecting the options expiration date. So this is only used with options. It does not apply for forex. You can do it out of curiosity, but you will not use it in any trade. Okay. So I just finished the OTA options basic class. They always recommend you buying at least 90 days out of debit trades. I have seen you select less than 90 days to expiration. Just wondering your opinion on sticking to selecting plus 90 days options to reduce the theta effect. Okay, well, I'm trying to do more than that in the rules I'm giving you. Ultimately, you know, again, we'll do stuff that is a little even more advanced with a search function of TradeStation and stuff. So if that's okay, I will elaborate more on this in future sessions, but I'm just gonna give you a little hint, which is gamma is a magic Greek that most people don't talk about, okay? And gamma changes as time passes, and this is another reason why we're going to be using different expiration dates compared to the standard rules in the industry. And we're going to do stuff that is a little, you know, let's call it edge. Okay, we're going to do again, scratch a little extra profitability on how we build the option strategy. Okay, so again, that would be a very long answer for me to get into it, and we will have advanced option sessions that we haven't had yet. Okay, love gamma. Yes, me too, Lisa. One quick question: how can you splice into a fast-moving market using UFOs? The answer is patience. That's the answer. And I know that for some of you, this is not what you wanted to hear, but that's what it is. Okay? If our market is moving fast enough, where price is never retracing back to the 15 moving average, you wait. That's it. And while you wait, you go trade another market. Because while the S&P may be going crazy, the euro may be just normal. While the euro may be going normal, crude oil may be going crazy. Okay? So don't force a trade just because what you see is very exciting and you cannot wait to jump on board. Follow the rules. Use patience and discipline and be professional. And if you want to trade more often, because let's face it, sometimes markets will move very fast, okay? Then just have a few more markets under your belt so you can take trades off other markets, okay? Or as I said before, maybe instead of the 15-minute time frame and the 2, you do the 5 and the 1, but you don't do it only that day because that day is volatile. You do it every single day, okay? So again, do not improvise, follow the rules and use patience. I have one question on trading psychology. Would you give any set of rules where I can set at what point I should stop trading trades for intraday or long term? For example, if I get continuous stopped out, let's say 5 or 8 trades on continuous profits, which result in too much trading and giving back the profits at the end of the month. These questions may link with risk management rules. Any advice would be of help. Yes. So first, I need to say as well that we have never conducted a proper session on risk management, and we will. And we will address many of those things, okay? Because you should have rules that stop you trading for the day. If you got too many stop outs in a row, you should have rules that stop you trade for the week. If you get too many stop outs on the week, you should have rules that stop you trading for the months if you have too many stop outs. And the reason why, it's 2. Number 1, it could be you getting emotional and breaking the rules all the time, right? Why? Because maybe you fell into revenge mode. Why? Because you got 2 losses in a row after 3 winners in a row. And after 3 winners in a row, you thought you were the super trader. And now the market is giving you a lesson, which it gives us to us at times. And the moment the market gives you a lesson, you are like, wait a minute, market. I am stronger than you. I'm going to prove you who is the boss. You get in revenge mode, and now you get slapped on the face all the way. So you should never do that. And when you're inexperienced, it's very easy to recognize. But when you are newer to trading, you may not realize you are doing this. So what is an easy way to fix that problem? have a rule that says if you got, let's say, 3 losses in a row, stop for the day. That's it. Okay, it's simple. Another reason why you want to have that rule is because the market may be in a crazy stage. Okay, for example, May 2010 flash crash. It was crazy nuts for a few hours, like completely, in one hand, completely unsustainable market condition. In the other hand, it truly happened, it is not a joke, and it did happen. So if you were to keep fighting it just because it's crazy and you're like, it's so crazy that it's gonna change. No, don't fight it. Okay, there is a very common quote in the market that says that the market can become irrational longer than you could remain solvent. Okay, so don't fight it. We gotta be respectful of the market. The market is bigger than us. We have to be humble. We need to find this beautiful balance between confidence and being humble. That is when you will excel as a trader. Okay, guys? So having these rules will be very useful. For now, the short answer is after 3 trades, you stop. Okay? And when we do risk management, I'll get more detail. I wondered if on this Saturday sharpening, you could comment on using UFO during the 6 p.m. open and evening hours EST zone. Are there products you would recommend over other, perhaps Japanese yen, Australian dollar? Also, any other products that you feel are good candidates? Well, I live in Singapore, so 6 p.m. Eastern time is 6 a.m. here. So I have to say at that time, normally I'm still asleep, but a little later in the morning is trading time. Okay, and definitely the speed of movement at that time in Asia or at that time in the US is much slower compared to during US market hours. Okay, so everything is gonna be slow pace compared to what you see during US market hours. Okay, so I would say I don't have any favorite. I'm just gonna trade the markets I trade. If any, the commodities maybe could be a little bit of a faster asset, but again, it's not gonna be every day either. Okay, so my recommendation is just look at markets that follow the rules and just know that at that time, everything takes a little bit longer time. Okay, everything takes a little bit longer time, so it'll take longer to get to your target. That's all. Okay. I have asked a few times now how to set up the charts in TradingView for ES and NQ and the timeframes that should be used since there is no tick or share bars in TradingView. There are 6 charts in TradeStation versus only 2 in TradingView. I do not trade Forex at the moment. Okay, good. So look, you can see that in my TradingView, I got a pretty cool setup here actually with the euro with 5 charts, which are 5 different timeframes. So again, since this applies mostly to Forex, even though, remember I said earlier that you could also apply it to the longer term. This is the daily time frame of the SPY, right? So we need to talk about longer term, okay? So this also applies to the longer term, but the first conversation I would like to have about this with you all guys is about Forex. And since next weekend is gonna be all about Forex, okay? So let's talk about it next week if that's okay. And we will have a proper session on how to build this, okay? Good. You mentioned today that you look into ranges to provide similar setups. TradingView Basic does not offer 2-minute charts. Okay, so we'll talk about that next week as well. If you notice, if I show you those time frames, okay, notice that we have a section here. Let me get the right drawing. So a section here on the left with common timeframes, edge timeframes, and reactives. And we are using edge timeframes in the sense that those are fib numbers. You guys see that? Where on the right side, I am just using everything is the standard timeframes that you see everywhere, 5, 15, right? And I also have the range, which I will need to explain tomorrow. But just look at the numbers, 5, 15, 10, 100, 1 and 3, 1 and 10, 60 and 240. All of these timeframes come by default with TradingView, even if you're using a basic plan. Okay, if you're using a pro plan, then as I do myself, then you will be able to customize the timeframes and you can have 2 minutes, 8 minutes, 21 minutes. You can customize everything you want. If you are not using a pro plan, then you have to use the normal timeframes. And as you have seen in the screenshot, I am telling you which ones. Okay, but please bear with me. Wait until next week when I get to explain how to use all of these properly so you do not get in trouble. Okay. Guys, I got very few questions left here, so I'm gonna finish the questions, then take a look at the comments box, and then we'll conclude the session. Okay, guys, you guys are doing an amazing job just working with me here and bearing with me. I know today it's a little intense, isn't it? So I have been analyzing the intraday trading rules. I see times when the dollar is closing above, then below 9 EMA. I am thinking that this is not a good trading environment. I would rather see closes below for a downtrend or above for a downtrend. Thoughts? So I believe that dollar means the US dollar index. Okay, this is my guess. I am guessing that this chart represents the dollar index. Okay, and I believe that the trader here was asking, and if you're in the room, please let me know if that's not the case, but I believe that the trader was asking that let's say I trade the S&P or the euro or whatever, should I look at the dollar index and see clearly that the dollar index is in a trending condition with multiple closes below or above the moving average? Okay, and my answer to this question, oh no, Lisa, that was you, now I remember. So you say it's the price? Yeah, no. So the answer, Lisa, is not. Okay, you should not do that, because if you do that, here's what's happening. You are overcomplicating the methodology. If you overcomplicate the methodology, it's going to have multiple outcomes. First, frustration. Why? Because it takes forever to take a trade, you never find a trade, and then you keep see the market moving, and you keep not being in trades. And it's going to generate frustration enough for you to start breaking the rules and get in trouble. So the rules are the rules, and they are to be respected. Is that making sense? Now, I get your point. And sometimes you see, hey, went above, and then it went below. Hey, went above, and then went below. Hey, went above, then went below. What a teaser. How do I avoid it for this market to tease me? Well, let me tell you that typically those teases are not teases. Those teases, if you had looked at a lower time frame, okay, I mean, in this case, you have the 15-minute time frame, isn't it? But if you had looked, okay, at a lower time frame, typically those teases, when price goes above the average and it goes much, much higher before coming down again, typically it's because there was no UFO. That's why price was able to go higher, because there was no UFO. When there is UFO, normally it doesn't happen this way. Is that making sense? So again, the methodology works. You can backtest it, develop your own expertise and experience, develop your own confidence, and you will see. Okay? But don't change the rules, don't break the rules. When it comes to trend, we are doing enough. We don't need to be more perfectionist. We could certainly add more things, but the only thing that will happen if you add more is that you trade less often. And then your win-loss ratio will improve by 2%. But then you took 40% less trades. In other words, you make less money. So it doesn't make sense, right? So you are looking at the average and you are looking at the DMI. The DMI is looking at something which is pushes, where the trend, what is looking is average price movement. So if the average price movement is down and you got pushes, that's evidence enough for you to say with confidence the trend is down. Then you got the UFO, it's very likely to react. You are very likely to at least get to your safety target. If you have no UFO, that's when you have the teases. Okay? That's it. Okay? And by the way, some of you have been practicing a lot. And just so it's not me saying it, you guys, the traders in the room that you have been practicing the methodology, would you agree on what I just said, that when you got teases is because there was no UFO? Would you agree on that? Please go ahead and comment in the chat box. You don't need to, because again, some of you may be in the middle of practice, but if you have realized that already, please type it, because it's not about you confirm what I said to me. It's not about me feeling good about it. It's about helping the group of traders here in the team, if you wish, to develop their own confidence, okay? And if you guys are a little more advanced when it comes to confidence because you already done the practice, so that would be helpful, okay? I understand I'm crossing a little bit the line here, asking for something more in the personal side, but that would be healthy. Okay, guys, sorry, I was clearing my throat. Very good. So, yeah. Bojan says, I see it on a daily basis. As an intraday trader, it develops my confidence and it helps to a ton with clarity. Got it. That's it. So again, guys, rules. Last page. I'd be interested to hear thoughts on my research previously sent that indicated that the US, the TY, and the 5-year note produced the highest probability predictions with a calibration parameter of 61.8. Tuesday short-term futures was also educational. I'd be interested to hear whether the relatively weak 15-minute trend, which was possibly sideways but fitted the rules, provoked further discussion, adding ADX greater or equal to 25 to the rules. So 2 questions. Question number 1. Why is it that the US, the TY, and the 5-year note produce the greater calibration parameters? Well, very simple. Because it's the biggest market of all markets. Okay, money-wise, the bond markets, I believe the bond markets are 3 times the size of equities. Okay, like for example, Nasdaq, S&P, bonds is 3 times the size. And by the way people buy bonds, it could be for speculative reasons like we do, okay, or like we do with the S&P or the crude oil, and we can do it with the TY, the US, and the FV as well, right? But most people, including investment banks, they don't buy bonds for speculation purposes. They buy bonds to get yield. And therefore, when they place an order, they don't cancel it. They just wait until they get filled because they want the yield. Okay, and this is why you will see a little bit of higher performance with those markets, okay? ADX 25, the answer is we are not gonna use it, okay? Because basically, this is the same question I just answered earlier, okay? Where could you add the ADX 25? Yes. Would it make it better? Yes. But what's the outcome? You will get 40% less trades and you will increase your win-loss ratio by 2-3%. I'm just making up those statistics, by the way, but you got my point, right? It's not worth it, okay? So can you do it? Yes. If you are very conservative, go ahead and do it, okay? It will match your personality, but I would not recommend you to do it, okay? Because of what I said. I wanted to ask you, if we have time on Saturday, can we go over some journaling, what to do, how to do, okay? Well, we don't have time, unfortunately, okay? So we'll do it another time, but I agree, okay? And we need to talk about that too, because it's very time consuming, it's a tedious task, and you know, it's in the other hand, you are right pointing out it's critical, okay? And it's true. Having said that, journaling has to be kept simple, because by the way, I have seen the document you attach when you send that message, and your journaling is very amazingly complete and therefore way too complex. Okay, so I believe that you are probably a very detailed oriented person, very perfectionist, which is very, very good. But in the end, you end up exhausting yourself, and the danger is that you may stop journaling, you may stop backtesting, you may stop trading because you're exhausted. Does that make sense? And again, journaling needs to be done in a healthy manner. Okay, so my recommendation is, if you are exhausted, here's what you do. Type on the charts when you plan the trade. So you type the basic parameters of the trade when you plan the trade. After the trade is over, you type on the chart what happened. And you print it out in paper. And yes, we are in 2019 and I love technology. But you will see why I'm going to ask you for paper. And you do that every single trade. Until you have a little booklet with a collection of trades that you have taken. And what do? Well, once a week, once a month, you go find a nice place outdoors, ideally a sunny day, and you go sit in a bench somewhere. And then you review everything you have done. That's magic. Why? Because you are in a different environment with no stress, looking at your trades from a different angle. Why a different angle? Because it's not an electronic screen in your office, which is where you are every day. It's a piece of paper, different environment, in an outdoor environment, different than what you trade, with green around you and a beautiful sun giving you the positive energy you need to review your trades. And what's going to happen? You will realize things. You don't need to log it in a spreadsheet. Just keep looking at it. you will realize things. You will realize, oh my God, I always make that mistake. Oh my God, every time this happens, that tends to happen. And this type of journaling takes no time, and it's a very, very healthy process, okay? And for the spreadsheets, you know what, it's great, but I would recommend you to basically work on the trade confirmation documents that your broker will probably provide to you, because those trade confirmation documents probably will give you entries and targets already, and how much you made and how much you lost. So then you can use that in a spreadsheet just to calculate basic ratios such as win-loss ratio, reward to risk ratio. You could do this with your statements. Is that making sense? But the key of journaling is to review the trades, and you can do it in that very simple manner. It takes little time. And again, we need to go back to old school in that case, just so you force yourself to be in a different environment, looking at something different, piece of paper. Guys, a quick question. Based on this spreadsheet, I need about 3 WS. Okay, yeah, workspaces. Yeah, per asset, yes. I'm struggling a bit with how to use the MA. Do I look at the chart above for long, assuming enter? Okay, so I think I did answer this today, isn't it? I did answer this today earlier when Orlando was asking about the trend. Okay, so I did explain that earlier today. So this was my last question. Okay, so now I'm just gonna look at the chat box, which I believe we are almost done, and we'll conclude the session, guys. We are champions today. 2 hours and a half. Here we go. Let me see. I think that the options position is a high priority. Oh yeah, yes, I said that before. Yes. Yes. We talked about that. Yes, Orlando, Forex next week. I love the fact we have Formula One fans in the group. Very good. Yes. Yes, Maka, could get useful to get in and out of the trade before news. Yes, certainly. And, we just need to grow as a community, and we are growing. Growth also implies organization, because we are, let's call it, slightly flooded with emails and questions, and we need to give support from every angle. So the more sessions that we add, the more support we need to bring, and I want to make sure that we are well prepared for that when we do. Okay, but again, we will be adding sessions, guys, and the time of the sessions will also be selected at key times such as news. Okay, very good. Using gamma as an accelerator. Patience. The patient man waits on the side of the reader bank for the body of his enemy floating by. Yeah, wow, good one, my friend. Thanks for that. I love the quotes. Do you have a workspace for this futures contract? Yes. Yeah, 1 workspace per contract, because remember, the share timeframes and the tick timeframes are unique per contract. Okay. Yep. Geneva, got to go. Thanks a lot. A pleasure. And dear Orlando, I have to go. Jose, take care, my friend. I'm sure he's going to play tennis. Maka, your British pound trade worked perfectly last week. Thank you so much, Maka. The short from the 29.22. Hopefully, you guys took it. Bojan, I see it on a daily basis. Thank you, my friend. Yes, I noticed it and read it. Interesting. Thank you for that, Jose. Sounds like an out-of-the-box thinking will maybe what I need. Amazing. You have for everything. Thank you so much, Maka. Yeah, a pleasure. Guys, again, we just concluded our session here. Again, super happy for the progress that we are doing. I'm really, really happy, guys. Okay, I had times, and if you've been in the sessions for sometimes, hopefully most of the times I'm, let's call it, nice, but sometimes I am also quite direct. Okay, because sometimes I have to say what I have to say to help you, and sometimes it may not be what you want to hear. Okay, so I have to say that I'm very, very happy, guys, in this case, because I can totally see with all the questions you sent, with your interaction, with the way some of you answer questions, with the emails you send, etc. I know you guys are doing what is needed, okay? So good job, super, super congratulations. I know many of you are watching this recorded because you could not make it, okay? So I know that, so good job, same to you, my friends. Hopefully the listening to your answers in the recorded session was helpful as well. If not, please shoot us email, okay? Just remember we're here to help. Really, really committed to get you to the next level, guys, and we're just going for it, okay? So let's do it together, okay? And keep up the good work. So one very last thing before we go, if you guys never utilize TradingView, out of curiosity, I would like you to give it a shot, okay? So you know what it is. If you don't have a TradingView username and password, you can get it for free. You just need to get into tradewithufos.com/tradingview, okay? www.tradewithufos.com/tradingview. The moment you do that, it will give you access to what their plans are, and it will look to you different than me because I am a premium user of TradingView. It says Pro out there, you see Premium, and therefore TradingView is giving me a specific offer, 2 years with 33% discount, whatever. So your figures will be different, but it doesn't matter the figures. The one I want you to check is the one on the left, the basic plan. That one is free for everybody. So click on the basic plan and magic, you will have a username, okay? The moment you have a username, you will be able to log in. And then what I would like to ask you is that you do a search for people and then you can find us. You just type Tradictive. Tradictive is our username. So you can type Tradictive, you will find us. Here we go. And then you just click, and then you'll be able to get into our, if you wish, main page, okay? So what do you see in our main page? You're gonna see some trade ideas that we post from time to time. Those trade ideas, don't get me wrong, they're super basic, okay? We are not following any of the rules that we do in the get-togethers here. This is super, super, super basic stuff, okay? But anyway, most of the people looking or reading these ideas are not prepared or educated at your level, guys, because they have not attended those sessions yet. So we try to keep it very simple so people at least get to understand what's going on those charts, okay? And that's it. But anyway, so you can connect with us here, and I would like to ask you guys to like and follow, because these published ideas that are crazy basic at the moment, they will become more advanced in the future. And as they become more advanced, then you get daily notifications as we post them and stuff. And, again, just like on YouTube, I ask you to click on the little bell so you get real-time notifications. So kind of the same thing with TradingView, so you also get notifications, okay? No matter if you use the UFOs in TradingView or you don't, you still can get your basic access, which is free, okay? And by the way, just in case you have not seen it, because I know many people have not ever experienced TradingView, let me tell you, it's amazing from many points of view, but the one I want to discuss now is from the data feeds point of view. So with TradingView, you get access to all markets in the world. It's just, I've been using it for years and I'm still impressed. It's just like, you name it. You want to trade Turkish stocks, you got Turkish stocks. You want to trade commodities. You want to compare the price of gold in India or US. You have all markets. It's really, really impressive. So for you to be able to chart the market, you just click in here. Okay, let's say you want to chart Bitcoin. So you just type Bitcoin, for example, okay? Is giving it to you Bitcoin futures because I have selected futures, but if you want to see the real cryptocurrency, you click on cryptocurrency, you can see all the exchanges that trade the Bitcoin against dollar, Bitcoin against other cryptocurrencies, Bitcoin, gold, whatever. So you just click and you get the chart, okay? And this could be Bitcoin, it could be, you name it. It could be anything, okay? Anything. And the methodology that we are applying in the get-togethers, you could apply it to. Okay, so maybe you are not trading Bitcoin, but you are investing in Bitcoin. Okay, so you just apply this in a larger time frame. Okay, and now you get your Bitcoin. Right now, I'm looking at the weekly. Okay, if you are looking at cryptocurrencies, most of you may have heard that recently cryptocurrencies have been going up very, very intensively. So what's going on in the larger time frames? Well, look at that. We are in an uptrend and it's strong. Okay, so if it drops around 5,800, okay, 5,800, look at that, UFOs. So what do? You plan a trade. You rebuy more Bitcoin. Is that making sense? So again, same story, you can do it, but you can do it with the cryptos, you can do it, I don't know, let's say you live in Singapore and you want to trade a bank called DBS. So here is DBS in the stock in the Singapore exchange, right? You have Germany, you have Korea, you have India, you have Mexico. So again, everything is in here. You just type DBS, here's your Singaporean stock in this particular case. Is that making sense? Again, take a look if you've never seen it. I never spend time explaining any of this. I'll do a session once just to talk about TradingView, just so you know how it works. But I just wanted to, flash it quickly because some of you asked for it as well. Okay, guys? So anyway, oh, you are in the Euro GBP. Very nice, Maka. Very nice. Okay, everyone, you guys take care, everybody. Again, super, super happy. I'm repeating myself, but I'm really delighted with how the sessions are going, guys. So see you on Tuesday. Bye-bye. Have a good weekend. See you then.